are you doing great stuff? Yeah. Are you doing this one? Are you full time with this?
Yeah,
Are you full time? Right.
yeah.
Okay. Um. So now where I am is I'm working
Okay,
and combining this.
right.
And so that's where the challenge is.
Okay,
Okay, because my main aim is to switch to this one, because
right.
by full time, but I mean you cannot just, that's it. So I work with an agency where I'm able to choose the days that I want to work, blah blah blah. So maybe because of the week, there's some days I can work 4 days, 3 days, then dedicate like 2 days for trading, that's the transition where I am.
Okay,
But my main issue is consistency.
okay,
That's my main issue is consistency. That's number one. And then number two is I'm able to analyze it, using a top-down approach, but where I normally struggle is the entries.
okay,
My entry is the main issue and main concern.
okay,
That's number three. And then so when even when I've analyzed the thing and then there's one I'm struggling with the entry and then whilst on at work I'm using my phone, so sometimes it's a bit if I'm using my phone I'm not able to see the thing clearly to be able to um
to make
analyze
the
it.
decision. Yeah.
Exactly, because there's days when maybe the week I'm off, then I'm on the computer, then I'm able to see clearly. But when I'm working, though I've done the analysis and everything, it's so then I'm struggling because I'm not using my phone. I'm not seeing it properly. So my strategy is intraday, scalping day because I don't like to leave it overnight. I don't like to treat. I mean, maybe long term wise, I'll get there, but for now, I don't want to leave it. So that's it. So that is those are the three main things that I'm struggling with at the
Okay.
moment. Yeah.
All right. Number one is I would like to say thank you so much for filling me in on what your challenges is. And I think that's the most important questions that I always ask people. And then if they're able to break it down straightforward as you've broken it down, I can
Yeah.
see what you are lacking and why the consistency is not there. Okay.
Yeah. Yeah.
Um, it's not your job.
Yeah. Okay.
So let me give you that kind of a good news first of all, that it is not your job that is hindering you from being consistent. All right. Um, well, as regard to the entry, we will talk about things that will make the entry a lot more easier. I will try my best to introduce you to that today, right?
Okay.
Such that once you have what is called trade location, right?
Okay.
Without that trade location, you are not going to be executing any trade.
Okay.
Okay.
Mm.
So that will kind of simplify the fear of missing out.
Right. Okay.
Okay.
Right. Mm-hmm.
So once you have overcome the fear of missing out, that okay, I've done my analysis and I've picked the most there's a particular word that I wanted to use.
High probability.
High probability is one of the word, but in terms of trade locations, without a early analysis of what your trade location is going to be, okay, before the price actually gets there,
Mm.
then you will be late in your entry and then you will be late in your exit.
Right. Okay.
So high probability, good word, but without that prior analysis of this is going to be the most viable entry for whatever I want to do on whatever I'm looking at, right? Which means, first of all, you have to have that prior analysis, okay?
Yeah.
You're not going to be jumping in, right? And you are waiting for that to occur, okay? One of the best way to attack that will be setting off alerts when
Right.
such price level hits, okay? Which means if you have an alert, if the alert hasn't sounded, then you are not interested in what's going on with the market, okay?
Right. Okay.
Such that you won't be using so much of mental resources in fighting. I didn't do well today, I should have done well, or this is there are so many challenges that traders can face if they have to struggle with where exactly am I supposed to pick the trade. So that trade location, we will talk about it. And then the other thing that we'll talk about is that entry. What are I will give you what is called a confirmation protocol,
Right.
which means without that protocol, and you will be able to see the protocol easily. Without that protocol, you are not going to need any reason to execute a trade. Okay. All
Right.
right. So let's delve into it. So is there any particular currency that you are looking at, or any particular um peers, or any particular instruments that you like?
Right. Okay. So I like oil, and
Oil.
then euro. So the euro. Okay. I like oil, euro AUD, euro NZD, and then AUD USD. At least this one would.
Okay. So I've noted those ones down. And in terms of time, what time do you normally have time to look into the chart?
Right. So my it's not a particular time.
Okay.
Um, I try, and because like over the weekend like this, I just finished work. I'm
Okay.
here, so that's why this evening I'm doing this, and I'm doing it. Then tomorrow in the evening, because I work outside London, so I have to travel,
Okay.
stay in the hotel,
Right.
and so I'm like this coming week, I'm starting work on Monday. So tomorrow evening, I'm traveling back, stay there, and then start work in the morning. So I'll do some today, and then do some analysis today, and then so do some tomorrow evening. Yeah.
Okay.
Yeah.
All right. So the reason being is this, the market operates at let's say for example, the forex market operates at three major um sessions, which are the Asian sessions, the London sessions, and the US sessions.
Yeah.
So at the beginning of those sessions, there is high probability for a large amount of volume of traders to come into the market.
Right.
And then when they do, they tend to get the price to move.
Right. Okay.
You get where I'm coming from? Okay.
Mm-hmm.
So if you are not able to time your presence in the market during those periods, then your alert may sound and you may miss your alert. You get where I'm
Right.
coming from. So,
Okay.
but you don't need all the three sessions. Maybe one or two or three of the session is good for you. But the thing is, getting accustomed to the sounding of the alert, say for example, getting accustomed to the sounding of the alert and then understanding what a confirmation protocol is and how to utilize that confirmation protocol will greatly help you in achieving consistency, which means for you to achieve consistency, certain things need to fall in place for the execution to take place. If those things does not fall in place, then you are not going to execute. Okay.
Yeah.
All right. So let's it's easier said, but let's look into some of the things that you've actually talked about in terms of the peers that you like to work with. Okay. Can you see my screen, right?
Yeah, okay.
Okay, so then as we go, we talk about one or two other little tips. But obviously, the most important thing is I'll look into oil first because I was trading oil myself the other day.
Okay.
And it's falling significantly. So this is another one. XTI.
Yeah. Yes.
So that's the US crude. Okay. Let me choose another chart in case I want to go back to this analysis for whatever reason. Okay, so what I'll do first of all is I will remove all drawing and I'll have a naked chart. All right. Okay, so one of the key concepts that I want to introduce you to make life easier for you in terms of understanding trade location is, first of all, anytime that you come onto the chart, try your best to start from the monthly chart. Okay.
Right. Okay.
It doesn't really matter whether you've done this analysis today. If you are coming in tomorrow, say for example, if I have done an analysis on oil today and certain decisions that I am expecting the market to make are still in flow or they are still being made, right? Maybe after 3 days or 4 days, the market might decide to possibly retrace for whatever reason that you want to just retrace away from my initial thoughts or my initial directions, which means that retracement might go against my initial conviction. And if that is happening at the time when you're looking at the market, it can lead to confusion and want you to change your bias, right? Are you getting my point?
Yeah.
Right. So, and instead of you to change your bias, the best thing to do is to go back to your analysis, let's say from the monthly chart, which is the best option. All right. So we're looking at this oil chart, and the first thing that I want you to see is this. We're going to talk about some key important aspects of the price chart, which is the market structure. Okay.
Okay.
And then in introducing you to the market structure, you'll be able to understand some key things that will keep you in check and in line so that you can have a bit of a peace of mind. So basically, the first thing you want to understand is this. You want to understand that if the price is moving, yeah, you want to first of all check that the market that you are trading, is it in a trending mode or not? Okay. So, and for you to get that market to be in a trending mode, you need 4 points. of structure to be in place, okay? And that will convince you to say to you that this market is in a trending mode. And that 4 points, they will look like this, right? So let's say that is the first move up, okay? The second move up, the second move will have to come down, right? It doesn't matter how far the second move comes down to, say, for example, if it comes near to the end of the initial move, okay? Right?
Yeah.
It does not matter, but you want to avoid move that hasn't really retraced so much. I will explain the reason why that is important at the same time as we go. But the more the price is coming down, right, it's giving you a much more peace of mind that you are buying the cheapest in case we are looking at a uptrend, okay? So let's say the price retrace almost 80 something percent or 90 something percent of the initial leg up. Let's say it has such a deep retracement, okay? And then the other leg comes like this. This is a full confirmation of a trend, okay? So this has shown you that this particular market is in a trending mode, and the trend that the market is in is an uptrend, okay? So what am I trying to get you to understand? So your next step on this particular market is this. You've had a first point, which is here. You need that 4 points to ascertain that a trend is in place. And those are structural points, okay? And those structural points, we will go a little bit deep into understanding them so that it can be a lot more easier for you. All right? So what happened at structural points is very important for you to know. At the highs over here, right, there are significant amount of orders, and those orders comes in two forms, okay? At the high over here, the traders who are selling and pushing the price down, they will have their stops somewhere above the structural points, okay? And those stops, they are orders in the market, okay? Right. And the traders who are trying to push the price up above this area as well knows that potentially there will be stops over here, okay? So when the price is approaching this level, there will be mixed reaction. Those are areas where psychological effects takes place and makes trader make some jittery decision, because the moment price gets over here, whichever of those orders is strong enough will overwhelm the other one, right? So the key thing is to be prepared that when prices get into this structure where price initially turns, you can't have a full conviction that price is going to break it, okay, and continue to go up, right? You cannot have that full conviction. There's no kind of traders that you can be that will make you have that full conviction that price is going to break it and it's going to continue to go up. The only time when you will have that full conviction is after a trend like this has been formed, and this is occurring again, right? Which is a retracement, okay? And if this market is truly in a trending mode, then you will be able to easily see the trend unfolding, okay?
Yeah.
Right. So now it is glaring at the first structural point, first of all, that the market is trending. When you are having this retracement now, okay, this is the time that you want to be prepared to get into the market. And for you to get into the market, you want to be getting into the market when the price is cheap. And I'm talking about when the price has retraced at least on the minimum more than half of the initial trend, which is anything from 61.8 to 78.6 to 88.6 retracement level. That is, initially you've ascertained that there's a trend, okay? Which means if that trend is going to continue for whatever reason, when the retracement is happening, the retracement should get you to a much more good discounted level for that to occur. Okay. All right. Yeah. So I haven't talked about the nature of trend. There is other things that we need to talk about, is to understand what part of the trend are you in. Are you on the external side of the trend, or you are on the internal side of the trend? All right. So the external side of the trend is the one that will always continue. We push a new boundary, right? So, and what do I mean by that is this. So on this particular chart, prices from year to year are the external structure of the price. Meanwhile, the prices that comes in like this, which is one of the key prices that you want to avoid, is the internal structure of the price, okay? And the internal structure of the price will be one of the ones that you want to avoid, because it wouldn't generate as much return as for you to get into the continuation of the external structure of the price, okay? So I will now demonstrate this little thing that we've talked about on the oil prices, and then you'll be able to follow me as I am demonstrating it. So let me just clear all this so that we can see where we are going. So if I ask you, I would like the class to be a bit interactive.
Sure. Yeah.
What type of structure is this? This side of the chart, and what type of structure is this? Is this the external or the internal? This leg of the price.
That is the external.
All right, so that is external, and the external part in terms of the trend is a part whereby you can have enough confidence to actually stay in as price is unfolding. Sorry.
That's okay.
Right. So going forward, so we've looked at the oil chart now, yeah? And looking at this oil chart, you'll be able to understand a little bit about the structure based on what we've talked about before we get into the entry. Yeah. So from here to here, coming down like that, going up like that, coming down like that, going up like that, and coming down to this level. If I ask you, what type of trend is the oil market in on this monthly chart?
That is an uptrend.
It is in an uptrend. Thank you. And despite the fact that and that is the we have what is called a major trend, and we have what is called an intermediate trend, and we have what we call a short-term trend. I mean, we will get into things. All right. So just because we haven't taken out this particular structural low, right?
Yeah.
Which started from here and then push up to here, and then we talk about some other we started from here and push up to here, right?
Yeah.
And give us that high, right? Yes, and based on the explanation that we explained, that it doesn't matter how price can come, in as much as we haven't break this low, okay, the external structure is still in check. Say, for example, if we break this low now, okay, right? something has changed, because the structure is very, very important. The reason why the structure is very, very important is this: the structure is what hold the price together to advance onto the next stage. All right, so say for example, now let's look at this briefly. So we go up there, we retrace, we go up again. And the thing is, when you are determining the structure, is very key for you to understand which part of the charts to use as your structural point. It has to be that part that has managed to high Grace. It has to be. How are you doing? Oh, okay.
Okay. How are you?
Yeah, not too bad. Not too bad. Right.
Okay.
We just doing a little training, but yeah, you can be part of it. If you have any question, do not hesitate to ask. All right. So when we look at this, we have a confirmed trend from this part. Okay. When the price come all the way down to here, right? That becomes that internal part of the trend, which we want to be careful of. And then again, now we now have a move that come all the way up to here. Okay. This move that comes all the way up to here, there's a little structure over here that occur. The reason why this structure is not that important, I will tell you as we progress. But we have a retracement down here, okay?
Yes, yes.
That retracement down here is still making us look good like a CVM. We can have potential continuation if we do not take account into that little breakdown occur over here. The reason why we don't take into account this little breakdown occur over here, let me get this out. The reason why we did not take into account this little break that occurs over here, as much as it would have been important, is because it does not retrace at least half of the
the movement.
Yeah. All right. So that's one key reason why you have to be careful of that, because those small retracements can be that retracement that mess you up when you are actually trading live, because you'll be thinking, oh, this little retracement has a support, okay? And that support will be that support that price actually want to go for, all right? To break that support, and then just because you are looking at that as one key support, and that support is not strong enough, price will go underneath it, take out that support, and then continue to now be going in your direction. We will talk about that as we progress. All right. So as I was explaining, then we now have a move that went up like this, right? Unfortunately, this particular move didn't give us a new high, right?
Yeah.
And then went down like that, okay? Still, we still have the last uptrend in what's it called, in play. But one thing you have to now understand about this move that went up like this and this retracement is we have more than half of this leg retraced, and this analysis applies to every other time frame as well, but I'm doing it on a monthly just for us to understand where the external structure is. So straightforward, we then have a move that came all the way up like this. We didn't take out this high, right? And that will start becoming a cause of concern. And then the next structure that was taken was this structure before the major structure was now taken. But the moment this structure is taken and then we have a lower high, what kind of trend are we seeing?
A downward trend.
A downward trend, because when you look at that 4-point structure that I discussed, we've now have this 1, 2, 3, 4. So we now start to see a downward trend, and then price decide to continue to descend. So going back to where the live price is, we're going to talk about two key things. Already we've discussed the fact that we are still more or less in an uptrend just because of this move. One thing that now becomes important to us is we should understand that this is still our external structure for now, all right, until price decide to break this. And then once that occur now, then the external structure has now changed to this leg. Are you getting my point?
Yeah.
Which means the next move that we are possibly expecting might be that retracement, okay? And that retracement will become an internal structure, and we want to find the beginning of a new external structure that will now start to take us down like this. And this leg is that leg that we want to be much more comfortable to play should in case we have a break. In case we do not have a break and then price find a reason to hold up here, and I'm going to look at some of the reason why potential possibility that price can possibly hold up here for this structure to see hold. Those are the key things that we're going to look at. If we can buy as cheap as possible now, then we can now continue to look for our external structure on this leg for the uptrend to continue, say for example. But oil being oil, it's a manipulated market. And the reason why I said it's a manipulated market is this: the oil runs the economy. If the price is too high, it will seriously affect the economy. There has to be large supply of it to calm down the high demand. You get where I'm coming from? They will make sure that they keep supplying and pumping more oil from the refinery so that the price can at least go down so that they can sell more cheaper oil to people. But I mean, cheaper oil is not really beneficial to the oil producing state, but because there's a regulation and everything and its effect on the economy, they wouldn't have no choice than to conform. All right. So that is just a fundamental aspect. So we've seen that on monthly, our external structure is bullish. Then we go to weekly. Okay. So on weekly now, the last external structure that we saw on monthly would be, let's say this is our monthly. We know quite fully well that we have that trend up and then we have this retracement. So we know where our last external structure is, which is this low. That is one key structure for us, okay? And then we now go to weekly. So this low, this level has become an important trade location for us. You remember when I started talking about trade location.
Yes.
Right? So that has become an important trade location for us. And in an important trade location, what we're going to be looking for is confirmation protocol. And we're going to get there. Okay. So we have this level. And the level, the good thing about the level is you will know the price as well, which is 62.24 based on this chart. Okay. If we're going to have to look at weekly, already we know that on monthly, I like to color code my charts in a way to make life easier for me. I know that this leg, this move from here to here, I will just color code in magenta, and I know that definitely that is my external structure. I don't even mind to label it in a way for me to just, if I'm seeing this on a much more smaller time frame, I will know that, okay, from one particular place to another particular place is my external structure. External structure top, let's say, right. So that will be on my right. And the same thing, external structure, let's say settings. So that's my external structure. All right. So when I'm now looking at this on weekly time frame now, yeah, this is an external structure on monthly. On weekly, I have this kind of a move that I will find the last low. That is important. There's a reason why there's a low. And then the last high, okay? On weekly, what did we do? On weekly, you can see that high to this low, we've created what? Some kind of a new downward trend for the weekly. All right. All right. So now you are following what the weekly is telling us, that the weekly is showing, although the monthly is showing us that we are still bullish, don't get confused. The weekly is showing us that we are in a bearish weekly trend. So the monthly one is a major trend. Okay, the weekly one will now become the intermediate trend. Okay, that intermediate trend is still telling us that the intermediate trend is quite strong. You can see that when we have this move down to this particular level and we have this retracement, even this retracement is almost up to that high, but we didn't take out the high. Just like what I was saying to you, that price can retrace ever out to any extent. What you are after is, did we take out the structure, which is 126.48? So we did not take out the structure, and then we start to see a bearish formation on weekly, right? And then the weekly is telling us a different kind of story, because that weekly trend, which is bearish, still continues and it's just about to take out this level, but we haven't seen that. So this is where we are on weekly, right? Okay. So on weekly now, you will see that this, from this high to this low, has become an external structure, while we have an internal structure over here based on weekly, another external structure, and we have an internal structure over here. So as we're going down now, what structure are we on weekly?
Downward structure.
Downward structure, but is there an external or internal?
No, that's external.
All right, so we are now on an external structure, external downward structure on weekly. And if you are on an external downward structure on weekly, what that one is alerting you to is potential possibility for this to happen, that, oh, if we, for whatever reason, did not take out this low, I'm just saying, for example, you will still be expecting that there will be some kind of retracement, okay, which shouldn't take out this high yet. What we will be expecting is an internal structure that probably will now eventually take out this low, okay? But so now what you've done in that sense is this: you have created a bias, okay? It doesn't mean that your bias will be right. And how would you know that your bias may not be right? Because you still have this key monthly external structure. So if you are saying that the weekly is going to break here, right? There's a potential possibility for that to happen, but you cannot neglect the fact that you have this external structure still holding. So this is the reason why breaking down here is going to be tricky, however how much you want to predict it based on monthly time frame. So this is an area whereby you want to be patient, right? And how you're going to now find that patience will now be based on that confirmation protocol, which we're going to talk about. All right. So what do we need to see as we are going? We know that we have 62.24 there holding. We cannot fully guarantee in our mind that 62.24 will break. None at all. But the good thing that we can see is we have a weekly, that is pushing down. The funniest thing is this: when you look at this 62.24, right? If the price breaks this major 62.24 level, there's another little level below it. Let me see, which is 62.260. 1 second. Right, 62.24. There's another little level below it, and that is 61.58. That particular level is there. Okay. So as price is coming down, our key objective now is to see, is there any reason why this price return is coming down with huge force? That is good. There's nothing wrong with that. Am I supposed to get myself involved in this and start selling this now? Or if I want to be a seller, let's say, for example, the market opens and I decide to say that, I've seen this kind of a move and I'm going to jump in and I'm going to start selling. That is not professional enough. You have to know when you're supposed to have patience. You get where I'm coming from? And the reason why you want to have patience is this, is for you to say to yourself that it is some traders that were selling from here continuously and the trend never breaks, okay? And when price gets to this key level, to think that maybe they're going to be able to push below it significantly is you overthinking. To say that they're not going to push below it at the same time, that is just what you are saying at this particular point in time. So what exactly do you need to see for you to be able to know that something significant will happen? Then you will start to investigate what actually happened at this low. At this low, which is the last cutoff point for us to see a significant move up higher. What happened? When price is bouncing from here, we take out this key structure, all right? The sellers over here, we took them out. Then we did not just only take them out, we created tiny little bit of structure over here, and then we make a new high. All right. So which means the buyers that are buying 62, they are very strong because they can break barriers, right? So price can come down to this 62, right? And do two things. We can even flush it, okay? When we flush it and start to move back up, right? So, and when we flush it and we start to move back up, that shouldn't really make you feel bad that, okay, now we've broken key lows, okay? This level can now become a key triple bottom. And when it becomes a key triple bottoms, it becomes a very strong support, such that, oh, we've broken it, right? And then it will look like as if we now have key external bearish structure, but that key external bearish structure, we cannot confirm that it's a external bearish structure until we fail to take out all this high. So if we break this, we will be relieving profit taking. You have to remember what I said to you, that when we get to area of structures, there are so many others there.
Yes.
Right. And those others, some stops of these traders, we can go for it that are underneath here, right? So that can give us a reason to break this, right? And when we break that, some buyers that are patiently waiting to buy oil cheap as well, they are underneath here. So this is a level that is clear that there are two psychological play that can happen over there. Some buyers are looking to buy the cheapest price, and they will be more than happy to see the break of here. So when that happens, they know that, oh, we've taken out some traders, and this is how the trading business work, or the trading mentality work. I want to give you a key point here, which I hope you'll be able to hold on to and you'll be able to understand the explanation. A buyer wants to buy anything as cheap as possible. So if you look at this chart, where is the best place for a buyer to buy oil cheap?
Below the 62 point.
Exactly.
Yeah.
So if you're thinking in terms of a buyer, I'm not saying the price cannot crash all the way down and continue to go down, but think in terms of the buyer and think in terms of all these traders that are taking price down. At least by the time they get here, they themselves will be like, let us feel a little bit relief, let's take at least some profit. We have tried and we are coming to key levels, which is a key structure. So this structure is determining a lot of things. There's so many things that's happening over there. Number one, it's not just an ordinary structure, it's a monthly structure. You get where I'm coming from, which means it's a longer term structure, right? And under that longer term structure, there will be stops there, which price will be more than happy to go for. And then traders who want to buy as cheap as possible, right, haven't gone for the stops of all these buyers that push price high, will then say that let's come back in. And they are coming back in, something has already happened on this chart. And I'll explain it to you. You remember I talked about internal structure.
Yeah.
On this internal structure, there is orders here that are protecting the people that are selling. Okay? At the top over here, can you see it?
Yeah.
All right, it's protecting the people that are selling, which is their stop loss. When price come all the way down to here and we retrace up, we have more stops here, protecting the traders that decide to sell all the way down. So we have more orders here at the same time as well, because we haven't gone above it. Psychology of the people that are in the market. When it comes down and we retrace up, there's a lot of selling pressure. We have more stops here as well. Are you getting my point? Because
yeah. So wherever the stops are, it's also considered as orders.
Yeah, they are orders because they will be triggered.
Okay.
All right. So if you go into the market and buy, you get where I'm coming from. For you to take profits, what are you gonna do?
To take profit, you need to wait for price to move in the direction that you want, and then close the trade.
So when you close, what did you do?
You took your order.
Yeah, you take your order by doing what? What would actually happen?
By closing what? So if you bought, then you sell at the where you want to take your profit.
So when you take your profit, that's a sell order, isn't it?
Yes. Yeah.
All right.
Yes.
So that is also an order.
Okay.
Someone actually, when you buy, right, and you are taking profits, you are actually unloading to someone.
Yes.
By selling to them.
Yes.
Yeah. So someone will buy what you are selling to them to carry on with their own journey. Meanwhile, your own journey has ended by taking profit. Now you've transferred your order to them. You get where I'm coming from? So the cycle continues. So that is one side. If you buy and the price go against you, right, and then take you out of the market, what happened?
You incur a loss.
You incur a loss, but taking you out of the market, what kind of order is that as well? Let's say you are buying.
Okay.
And then the price goes against you.
Yeah.
And take you out of the market.
So that would be a buy order?
That means you are buying again. It will be opposite. So if you do one thing, let's say you buy and you make profit and you come out of that position, it is the opposite of what you've done.
That is, yeah.
You get where I'm coming from?
Yeah.
If you buy and then you incur a loss and you come out of the market with a stop loss, it is the opposite of what you've done at the same time as well.
Okay, right.
So that will be a sell order. Sell you out of the market to nullify. It's like a plus and minus situation. Right, so you buy, it's a plus. To come out of the market is a minus, which is going to be a sell.
Okay.
Where I'm coming from. Either way, if you are coming out in profit or you are coming out at a loss, it is plus. So, the buy is plus, and coming out will be minus to take you out. You get where I'm coming from. Sure. So it's also a sell order. There's no but if you sell, you get where I'm coming from. If you sell from here now, for you to make profit, someone will have to you will have to buy back.
Yeah.
You get where I'm coming from. So what I'm trying to say in essence is, at the top of all these key structural points, that's why they are structural points, there are others sitting there. Right? And at the bottom over here, there are others sitting there.
Yeah.
Right. So you now want to be a trader that want to understand where the others are sitting, which you can see it clearly.
Yeah.
by me showing you where they are, right? And when you understand that, what I'm now trying to say in essence is this: if the price, for whatever reason, falls below here, it has opened the door for some traders to take profits, number one, because this is a key structural level. Are you getting my point? So those traders that are selling, they will be taking profits. And if they are selling and taking profits, what are they going to be doing?
So once
they were selling all the way down,
yes,
and then they know that they are approaching a key significant level over here, right? And if they want to start to take profits, what kind of orders will their take profit be?
That's they have to buy
exactly
it back.
So when they are closing their trade, they are buying back, right?
Yes.
Traders who want to buy cheap, what are they going to be doing?
They will be selling off their orders.
No, traders who want to buy cheap at a low level, what are those traders going to be doing?
Waiting for the sells.
They're going to be waiting for the sales. But if you want to buy cheap, what kind of order are you going to put into the market?
That is a buy.
Say it. Don't be confused. It's simple.
You
just said it. Just complete it. What kind of order are you going to put into the market if you want to buy cheap?
A limit order.
Say that again.
A limit.
All right. So, but don't worry about the word limit. But limit, what type of order is it? You want to buy. What are you going to do?
I don't know.
You're just going to buy. It's a buy order, isn't it?
Okay. Yeah, buy order.
Yeah.
Okay.
Dang, that's a trick question.
Isn't it? But traders who want to buy, they're going to be buying. The traders who sell and they are taking profit, what's their order going to be?
Sell orders.
No, the traders who were selling, right? They're now taking profits.
Yes.
In this key structural point, what is the order going to be?
It's a buy order.
It's a buy order.
Yeah.
Because they are already selling and they want to get out in profit. So they will have a buy order. Traders who want to buy the very cheap price too will have a buy order. So you are having large amount of multiple buy orders over here.
Okay.
And if there's no any sell orders to counteract that large amount of buy orders, price will just shift.
Up.
And if price is shifting, right? You have to remember that all these traders, some of them will still be in the market because they will be thinking, oh, now that we are going down low, and then they entered late. They've forgotten that they entered late. They are not looking at what is happening with the structure. Some people have started selling from here. They entered late. Their stop orders is also a buy order. Are you trying to get my point?
Yeah.
So if you sell over here and you place your stop over here, right? Over here, you sold right here and you place your stop over there and price comes down, but you did not come out of the market because you sold late.
Yes.
You want to reap the reward and price start to come back up till it get to your stop. That your stop too will be a buy order.
Yeah.
Because it's against what you're doing.
Yeah, sure.
If you sell, then for you to take profits, it will be a buy order. For you to come out of the market, it will be a buy order. So there will be more buy orders over here, and price can easily just take that and continue the buying process. What will be over here?
There'll be sell orders there.
No, you sold it, right?
Okay.
But now price is going against you, but you did
there will
not
be
take profit.
Order.
There will be more buy orders.
And
more buy orders will lead to what? A large continuation of flushing of the price upward till it gets to a level whereby I will feel like I say, okay, now I can relax. There's no more orders for me to take.
Right.
Are you understanding the mechanics of the market?
Yeah.
So what I'm trying to explain to you it's simple. I don't want you to get it complicated, but I want us to go over it one by one so that at least we can have a clear clue of what we are saying, if you're there with me. So,
Sure.
question time. What is unclear about what I've just explained?
So you're doing market structure, I see.
Exactly.
And because I got on late, so
I know that's why I don't want you to miss so much, but I mean,
sorry.
it's good when I'm not the only one talking and it's not Kwakwe alone saying it. We can look at it from everybody's point of view and learn from that. Right. Go
on. The pullbacks, or I understood what you said about sort of about the buyers. Because I'm new to market structure, so I'm not real strong in
Okay.
it. Do you have an indicator for it?
Well, yeah, probably I will get you something. Don't worry. All right. So the point about market structure is this. Let me recap again so that Kwaku can see whether there's something that is unclear. Okay. So, and the recap goes like this: for you to have a trend in the market, okay, you have to have four structural points. Okay. The four structural point will come like this: from, let's say, from that low to that high. Okay. And then from that high, the key to you understanding market structure is this: the retracement is very key. You
That's what
don't
I don't
want a
understand
23,
well.
you don't want a 23% retracement. Okay. I'll explain the reason why that is not. You don't really want a 38.2% retracement. There's still shallow retracement is showing you that price is strong. But if you get a much deeper retracement, anything from 61.8 to even as
70.
close as possible to the
Oh,
edge of the beginning of the initial move, it is still a valid retracement. Okay.
huh.
And what that would do for you as a trader is it gives you the opportunity to buy as cheap as possible. If this is going to be a trend and we did not take out this low, then you can have a much more bigger returns. And to be deadly honest with you, any large trading firm, they will be more than happy to buy this low. And that is the difference where patience pays. Okay. Because a retail trader is looking at it already thinking in his own head, okay, things are going to retrace 38.2. I found a 38.2% retracement. That's good enough. Let me jump in. You jump in over there and price tanks a bit to 50. It looks like as if it's going to be stable. It tanks a bit to 61.8. You are
Yeah,
looking frustrated. It goes to 78.6. Then
yeah.
you're
You're
thinking,
giving
what
up.
the heck? You get where I'm coming from. And it even gets closer to the edge of the beginning of this move, right?
Yeah.
But meanwhile, if you understand that word patience, okay,
Mm.
you won't have to worry. And trust me, every traders will struggle before they can get that into their tick score. Because the one thing a trader is thinking of is, let me make money. You get where I'm coming from? But to make money, there's something that's called patience and discipline, okay? And then you want to look for a trade location somewhere where you're going to find the most attractive offer. All right. And let me tell you an important thing about trade location is this. There's something that is called value. Okay. It's a little bit advanced. And I'll explain the meaning of value to you in a way where you understand it. You know, like if you go on the high street shops and this and that on a normal day and this and that, where there's no sales, price of goods and services will be what? Will be
Cheaper.
just normal price of goods and
Oh,
services. All right.
Yeah.
So let's say, and where the price is normal, there will still gonna be a lot of people coming inside the shop, right, to do their daily buying and selling. Okay. if there is a sale, right? If there is a sale, do you think a sale lasts through a whole year for any
No.
shop?
No.
All right, because if that shop's managed to do a sale for a whole year, they're never going to make
Lose
money,
money.
right?
Yeah.
So that sale period is a short period, and there will be huge competition because price has gone down below value,
Yeah.
right? So there will be huge competitions for buyers to come in, or whoever wants to buy at that particular point will come in, and that sales period will just dry up quickly. Even the sales might end before the period that they think the sales is going to end, because all the goods would have been gone. Are you getting my point?
Yeah.
And that is what happened when price is reaching discounted zone. It's overly discounted. And all the traders that are thinking, okay, let me get in early, they will eventually miss these sales because they are already in early and possibly out of the market. But when the sale now occur, it will happen like you see, so quick, so price money to get down here, and I missed it. And then before you realize it, the price is coming back up. All right. So what I'm now trying to explain in terms of structure is it has to have 4 key parts. This is the first part of the structure, second part of the structure, third part of the structure, and third part of the structure for our uptrend. For a downtrend, however, it will be the same. It doesn't matter how far it retraces, right? The more gives you the sense of patience, the better, right? And then it comes down here. Then that shows you that, oh, now we have a complete trend, okay? If we have a complete trend, what you've seen over here is you see this first leg to this point, right? They becomes your external structure, and that is one key levels that you want to watch out for, such that the internal structure, you don't really want to put a lot size on the internal structure if you're ever going to trade the internal structure, such that when the new external structure resume, which we're going to talk about how to understand when it's going to resume, where to look for it, okay? When the new external structure resume, if you are trading, let's say 0.01 on the internal structure, just to protect yourself, when the new external structure resume, then you want to trade maybe 0.10, you want to trade maybe 0.20, you want to trade maybe 0.30, because the new external structure will gives you a much more better return. Okay, so what we've done over here is we've looked at oil. All right, and when we looked at oil, we look at oil on the monthly chart. All right, and then I'll ask the question again because I can see that Damian has joined in as well.
I have a question.
Yeah, go on.
So external structure is the first leg, the second leg is the internal, and the third is the external.
So external structure, just as you said, is the first leg, right? The second is internal structure, right?
Okay.
And the third is another external structure, because your external structure is meant to continue the journey.
Yeah. Impulse. Yeah.
Right, which is supposed to be the impulse, but you have to be able to identify it. Okay. So what we've done is
that the discount, the premium and discount is the internal structure?
It will be the internal structure depends on the side of the trend that you are looking at. But what we've done again is we've broken it down again that, okay, on monthly charts, our external structure is this on monthly charts.
Sorry to ask. I just.
Okay.
You mentioned the discount, so I was thinking discount and premium.
Say that again. Yeah, the discount
and premium.
This discount zone or the premium zone. The discount zone is for buying. The premium zone is when you are selling. All right, so you're gonna get your discount zone here. Sorry, let me bring it up. You're gonna get your discount zone here. That is for a bullish trend. A premium zone is for the bearish trend. It's the same thing, but just the terminology basically. right?
Okay.
So for a bullish trend, it's going to be discount zone. For a bullish trend, it's going to be a premium zone. They just want to use terminology to confuse you, but
Yeah, I know.
main
Sorry.
explanation is for you to understand that those levels are there. And then, in fact, it's this. Let me break it down in a little way for you to understand. Let's say all of them has got a bit of a name. All right.
That's
So
with the fibs, right?
yeah, that's the fib. So you use the fib to measure your level. So this is very narrow retracement, right? And this is still very narrow retracement. This is 50% off, more or less, like, and this is the golden ratio on the 61.8.
Right.
From year to year, you've got the discount level that you are talking about, and then over here it's more or less like the stop hunt level on this. All right, so the stop hunt level will be the 88.6. So if you have a move that comes down here, is just a it's not a deep retracement, it's a very narrow retracement, a shallow retracement. And then you can then have another one that push down to here, which is just a very narrow retracement. And this, when the price comes down here as well, right, that becomes your normal retracement back to 50%, right? So if you are buying 23.6, you are buying fear of missing out. That is basically FOMO. You are not buying a discounted price as a buyer. And the same thing apply on the sell side. If you are buying 38.82, well, your patient level is not as weak as someone buying 23.6, right? Your patient level is slightly better. If you are buying 50%, you are buying a normal retracement, all right? But once price starts to get to 61.8 now, yeah, it's like you are buying something 60% off. You didn't want it 60% off. I mean, that means the all of the move has happened 100%. Now they are offering it 60% off. It's not such a bad buy. That's why you see that 60% off we usually work, right? So if 60% off will work and price will push back up, some other people have a much more affinity for understanding risk, and they will say to themselves that market is very risky. It's better for me to wait for 78.6%. And if I wait for that area of 78.6%, the only thing that remains for price to get to this low is 30%. But if that's 78.6% hold, then I can have 70% first of all gain. And then if price manage to break the structure over here, then I'll have more, you know. So from a thinking point of view, when you look at it like this, which one would you prefer normally?
The 70, the 70.
You get where I'm coming from. So if we're not being unnecessarily impulsive, and we have that sense to understand the meaning of waiting, and waiting is an important part of the business. Patience has got virtue in it, right? There's nothing wrong in you saying that means you are being selective. You are not in the crowd. You are not chasing the crowd. You are not chasing the crowd. Because what tends to happen at 23.6 is this. If price does this, let me show you what price will do. All right, so let's look at it in a way that will make it okay, so I got all right, so think about it this way.
Recording in progress.
So we have our retracement level and price decide to go up that much for whatever reason, and price is coming down, okay? And as price comes down, for the mere fact that people have seen that impulsive move, okay, the next thing that price want to do is induce you to come and join that move, right? And that inducement will come in at 23.6 or 38.2. And when you get induced and jump into the move, right, you would have forgotten that this is a large, significant move already, and price will just move up a little bit. And the next thing you see is it start to come down, and then it knows that you are here because you've managed to help to push the price up, okay? And your stop is down there as well. So you are buying and price start to tank because there are no more buyers. All the buyers have come in from this level, coming from that level, coming from that level. Let me switch this around 1 second. And look at how interesting it will become now, right? So we remember that this is our 23.8% level. What I just want to do is this. I just want to do this and reverse it for a second. Okay. So price has moved significantly up, retrace back to that 23.6% level, and then push up a little bit higher, attain some key significant what's it called, expansion levels as well, that normally will just give price a reason to fall, right? And price is coming down, knowing fully well that you are here and you are thinking maybe you are protected and you didn't take profit at this key level, and then your stop is here and we are pushing down. Your stop, you bought, what is your stop going to be? Kwaku?
Say it again.
You bought over here before and price push up, okay?
Yes.
But you bought at a very shallow retracement, which is not deep enough, okay? And price is coming down here. What kind of order is your stop going to be? And you are buying here. You bought here and price shift up, but you did not take out your profit, right? And your stop is still underneath here. What kind of orders is your stop going to be?
It's a buy order.
This is a buy order, but what is your stop going to be? Your stop loss that you put underneath this buy order. What kind of order is it going to be? Take your time. So you are buying, right? For price to go up. Okay.
Yeah.
If you're buying and you are anticipating that price should go up, you have to have the moment you click buy, 3 orders is going into the market. Say, for example, you're going to have your stop loss to protect yourself.
Yes.
In case price wants to come down to that level.
Yeah.
If you buy, you're going to have your target profit to take profit.
Yes.
Let's assume your target profit is way higher than this level, say for example, okay?
Yeah.
And your stop is below this level, okay?
Yeah.
And price start to go up and didn't hit your target profit.
Yeah.
Okay. But price start to come down now and come to your stop and take you out of the market. What kind of order is this top?
We are a sell-off.
Exactly. So that would be a sell order. And you have to understand that that sell order, the prices coming down is being generated by sell orders as well. And then there are more sell orders underneath here that just help the price to go a little bit more down.
Okay.
And then price can now eventually go down and go down to 60, 1.8 or go down to 78.8 and then now do what? By the time it's getting down here, if the trend really want to go up, it will then just shift up.
Okay.
And you have already been taken out of the market because of impatient entry.
Right.
So this entry that you are going into the market in at 23 point something or 38.2 is just an inducement to bring traders further in. And those traders that join in while the move has already occurred and there's no much move to make to the upside, right, are putting themselves in a position whereby their stops can be taken.
Right.
Because they did not join in at a much more discounted level. They did not join in cheap enough. If you understand structure, you will still realize that the whole of this move that move up and come down, right? If I ask you, what is the external structure now? What will be our external structure?
It's where there and then there. That is it. Yes.
That is external structure. But
yes.
The external structure continues to extend to here at the same time as well.
Exactly. Yes.
Right? And then when price move down below here, and this is what I'm talking about, some retracements that are not deep enough. When a retracement is not deep enough, price is liable to come and take those retracement out. So you cannot consider this level as a structural point.
Right.
So this will be your number one, this will be your number two, and this will be your number three, and this will be your number four.
Right. Okay.
So a shallow retracement will not give you a needed structure in terms of understanding structural point.
Okay.
A much more deeper retracement is what you are looking for to counter structure. And therefore, we will now go back into this. So what I'm trying to say to us in essence is this. You know, I said we have an external structure coming down here, right? From
yes.
That's an external structure on the weekly point of view, right?
Yes.
We have an internal structure that goes up like that.
Yes.
Another external structure to give us continuation.
Yes.
Right? And then another internal structure that goes up like that.
Yeah.
And then we have external structure that ended the week down here.
Yes.
Right. So we are now saying, for whatever reason at all, if price decides to come down here, okay, there can be significant amount of buyers' interest because number one, it is already cheap, okay?
Yeah.
And number two, some of the sellers knows that this is a key structure. Even if we flush here, we have given buyers a reason to see our weakness. And what are the weaknesses? The weaknesses are, look at the weaknesses now. And this will enlighten you and open you to so many other ways of looking at the market. There are stops here, right? For traders who take this external structure. There are stop here for traders who take this external structure as a short. And all these sell orders, if the buyers manage to come into the market, we can see a significant push up, a very strong push up, because as we are going up, we are meeting more buy orders, which is on top of here already. And you can see there's a lot because there's so many candles pushing up here, and each and every time that it gets there, we press down. Each and every time that it gets there, we press down. There are more orders over here, okay? So if I manage to get into a good, convenient trade location, which is over here, I can have enough patience to leave my position just because I understand where the external structure is and where the internal structure is, where the orders are.
Yeah.
Are you getting my point?
Mm-hmm.
So what the mindset that I'm bringing into you now is, how do I understand which trade that I get into, which is a good trade, right? The one way to do that is, first of all, understand my trade location, right? And how am I choosing my trade location? I'm choosing my trade location based on structure.
Right.
You get where I'm coming from?
Yeah.
So once I understand where structure is, right, and I know that there are orders in that structure, right, and I can understand what kind of move we engineer to get to that particular structure, I can see clearly where the stops are. The stops are only going to be above the structures.
Yeah.
I have a question.
Sorry?
I have a question.
Yeah, go on.
But that leg broke structure.
Say that again.
That leg, the last leg that was going down, it broke the structure. So it like faked people out to go back up.
Right. You mean this leg,
Yeah.
right?
Yeah, it broke the
All right.
structure of
So
going
as of now,
down.
as we're talking, we haven't broken the structure.
I mean going up.
Say that again.
It didn't it break the structure of going
No,
up?
the actual candle hasn't broken the structure as of now that we are talking.
Oh.
Okay, so we are now explaining a scenario, a potential possibility that if we break this structure, okay, right, what we would have done is we would have generated a new external structure to the downside. Are you getting my point? Because we've taken out these key levels. Now we've traded closer to here. But for the mere fact that we've generated a new external structure, which is going to be this particular move that comes all the way from here to here and broken the key monthly structure, okay? And I'm going to change that one to my weekly color, which is that. So this leg now that has broken this key structure, we have now generated a new external structure. Okay, and when we now have a new external structure, the reason why we have a new external structure is because we have traded below the key major monthly structure. Okay, but if the price is now going to retrace this new external structure, two things can happen. The price can retrace significantly and continue to go higher because we've got so many stops that the price can easily take along here.
Yeah.
All right. And the moment price comes back into here, right, we're going to forget that we have an external structure, which is over here. We will give room for price to do whatever it wants to do, which is for it to start to retrace and start to take out all this level, and be patient with it, because we know that if there are stops there and the stop is going to be in the same direction in which we're going, which is we're going up, you have to remember that the stops of all these traders that are selling are buy orders. And buy orders and prices going up is adding more to the buy orders. The price that is going up is actually adding more to the buy orders and taking out the stop as well. Those stops are already buy orders that will make the price to move up faster than we can even imagine of, until the price will now get to a particular level where there are no more orders and it will become tired, and then we can then start to have the continuation of that shift downward, and then the downtrend will begin.
Wow.
Are you there with me? All right. So let's assume I'm not sure how well you understood this. It is not that deep, but it can be very deep. So I want us to have a clear understanding before I move us to the next thing that we're going to be looking for. Because this, looking at the structure alone, is like it's like we haven't gone deep into how we're going to actually take the trade. We are just at the periphery, opening the naked body bit by bit. We haven't actually done the real dissection that we need to do.
Sure.
All right. So
Yeah.
what I'm going to do is, if there is an understanding of this, I will move forward. If there is a question which I want to give us like at least 5 minutes to think about it, right? To see if there's any question. If there's no question, if you feel like there's no question, I will still move forward. But I will give us a chance to actually take control of probably my screen if you have a mouse, and practicalize structure and tell me your ideas based on that structure. Okay, because Grace was pointing out a question that, oh, now that we've moved below, okay, your question would have been, why can't we be thinking of continuing going lower, isn't it? Rather than thinking of,
Yes.
why should the price go back up? Isn't
Yeah,
it?
it's a little,
Up?
it's the internal structure I'm not 100% on.
Say that again.
I know like the internal structure I'm not strong on. I'm strong on the lower low, higher
Right.
highs.
Yeah.
Like
So,
those we can see those. Yeah.
all right. So that word that you mentioned, the
But then
internal
you're on
structure.
a higher time frame. You're on a higher time frame too, right?
Yeah, we're
So
on a higher time frame. So the internal
uh-huh.
structure is what is coming down, right? But the
Mhm.
internal structure can turn to become the external structure the moment it breaks the previous external structure.
Okay.
Right? So this is the previous external structure. Once that one is broken, now we have a new internal structure. A new external structure.
Yeah.
Right. So, and once we have a new external structure, that doesn't mean that we're not going to have retracement.
Mhm.
Right?
Right, because the
So,
market flows like that.
say that again.
The market flows like that.
Exactly. So we will now have a retracement, and that retracement that we are likely going to have, I'm now showing you that we have so much orders hanging about at the head of all these little structures that we are seeing that are sitting down here, left, right, and centers. There are so much orders in all these at the top of over here. There are so many orders over there, and those orders, they are now going to be in line with the orders that is going to reverse back up. Okay, and then instead of us to be relying just on the buyer strength alone, the strength of all these top losses that are at the back of here as well can then aid that long trade that is going to be coming up and look like as if it's going to be a significantly bullish movement, right? And then the only reason why we are generating that significantly bullish movement is because we have so many other orders along the way as we were going up by taking out all the stops of traders that still remain in the market. And when we get to a certain point, right, which we will discuss all those points of interest, which are the next thing after structure, then you have to know which points do you want to start looking at for your trade. So one of the key areas is the trade location, which we've discussed. Now we're going to look deep into how do we approach it so that we can see what is coming and know how to deal with it. And I want us to do one or two other pairs as well. I just don't want it to be about oil alone. So we've got our structural point over there, and then we know that we have an internal structure coming all the way down here. We still haven't taken it out, and this is a weekly chart. So what we're going to do is this, and it will be getting interesting when you start to understand the power of the 8-hour chart. Okay, if you want to see things clearly, then you won't be playing with the 8-hour chart. So this is the daily. We know that when price gets here, that was the last key structure, okay, for price to shoot up to the upside. All right. So now we have to be forming an opinion that, okay, as we were coming down here, what I especially like is this. I like the fact that price was able to take out this low, okay? And why? You will be able to reason alongside with me here. What are traders doing over here? When price got here, what are they doing?
It went back up.
Say that again.
They bought up.
All right, so they choose to exercise their right to buy. So they push the price up. Okay.
Yes.
Where is their stop?
Below.
Below. Over here, what did they do?
They bought it again.
Traders will continue to do the same thing over and over again. They are buying. Where is their stop? Below at the same.
Below.
They decide to exercise their stupid right to buy again, and then their stop is still below.
Yes.
Stupid right to buy till the price gets tired. And you can see one thing that I want you to pay attention to is this. When we push up higher over here, we kind of maintain a particular high, which is right here, okay? And then we were able to push again a little bit higher. We make a new high over there, all right? And then stupid traders again, like everybody, they push up higher over here and they realize that
higher than the
can't
previous.
even take out this high again.
It
And
didn't
very,
take out
very stupid, idiots traders, they still come in and push up higher, neglecting the fact that we are not taking out this high over here, and they still come to push higher. They just sweep slightly a little bit above here, right? And then what then happened? Price starts to descend. I was actually selling this at a point in time. And then all the stops that were there, including this one, including the stops below there, including a lot of stop, contributed to price doing what?
Dropping.
Selling off significantly. So those stops are out of the market, all right? So when those stops get out of the market, we are getting down to a key level, all right? And this level is very strong. We cannot deny it because it's a monthly level, all right? And that becomes our trade location, one of the levels that we might likely to be waiting for. So what would then tend to happen is this. There is certain level of understanding when it comes to executing orders, right? There's one way to think like retail traders. There's one way to think like institutional traders. And what do I mean by institutional traders is I'm talking about there are some people in this market that doesn't care about the price. They are not coming into the market because they want to make profits, okay? They are doing their day-to-day transactions. And I'm talking about big companies like any company. Let's say, for example, a company that's doing logistics and they've got a lot of trucks. Would they care about the oil price? If they need to buy oil, whatever price the oil is at that particular point in time, if they are running out from their reserve, they will have to buy it. It doesn't matter what price it is. We're talking about normal people that use car on day-to-day basis. They are not traders, okay? But for traders, however, certain things are going to become more important to us, and we're going to be looking at levels, price, okay? And one of the key price that we are seeing on this chart comes in on this daily chart over here, which is when we got down to this level, okay, it becomes significant that price push up higher, all right? And when we got here, we kind of retrace. Look at this. Can you see this clearly? We've talked about this. What happened over here? And you should be able to identify it now because we retrace, right?
Yeah.
And I haven't retraced. We push up higher and then we retrace to this level. What kind of retracement is this?
That's a shallow retracement.
Shallow retracement. Are we going to be really interested in that?
No.
All right. And then price push up a little bit higher. Okay. and then eventually did a much more deeper retracement. All right.
Yeah.
And it will be funny if we measure that retracement, what we're going to
61.8.
All right. So, and let's actually put our tools to it. Can you see that?
Yeah.
All right. So we have that 61.8 there. That's one point. The other point is this, which I'm going to break down to you, and I want you to pay attention, and I want it to be a bit interactive at the same time as well. So that when you look at charts and you're looking at certain things, you will know what you are looking at. All right. So when we got here, right, and we kind of we were coming down strongly, isn't it?
Yes.
It's important to look at what is happening at the same, as much as it's not that important, it is important. We are coming down strongly. There's nothing that stops us from coming more strongly and coming down below here. But for whatever reason, this becomes a key low and we push up higher. And that thing that I was talking about, which is competition, right? There is an aggressive buying that actually come in over here and push the price up. We can see it from the week. That shows us that there is aggression in the buyers, all right? And then the next day now, however, suddenly we remember that, and we're selling. We were selling before we got here, and suddenly this happened for whatever reason, okay? And the next day, we feel like as if we can't really say that this selling pressure is not there anymore, although the surprise has happened, right? And that surprise is very good because that is key. So we decide to push down and sell a little bit more to see whether we can overwhelm this. And then what then happened? The price couldn't go below further, all right? So the high of that candle and the low of that candle, right, now start to become an important area for us to be saying to ourselves that what kind of orders are inside there. We cannot say that this selling pressure is not strong enough. It is. And we can then have a potential possibility that the next day will be a continuation of this red day and price will start to trade and trade down below here. That is possible because of the kind of trend that we have before we got here. Are you following me at all?
Yes.
All right. So if there's a significant selling pressure and that selling pressure was cut off by this competitive day in a strong manner, and then we have another following selling pressure that follows it, right? The next day, there's nothing wrong that should push price further down, right? But inside there, a lot of changes happened during that day. Overnight, all the orders that comes into the market are supposed to actually continue pushing price down based on the previous trend that we have. Something just switched them around and we got to push significantly up, all right? And that becomes your key order block that change things around, okay? And the highs of it and the lows of it becomes an important area whereby you can look for trading opportunities. So going back now, there is significant buying pressure, and that buying pressure did not just stop there alone. Then that buying pressure starts to do this. When we got to this level and we create a little bit of, let's say, high, that can possibly lead to price going down, that particular high that we created over there and looks like I say we can push down the moment we hit that 61.8, and that 61.8 that we hit there was inside this strong buying force that pushed price up. what happened? We were able to use it to push price above that structure, which is over here as well. Remember structure, right? And at the back of this structure, we should be able to have some stops over there, right? And when we took that stop, what did we do? We were able to use the buy orders, which is the stops, to continue to push price up, despite the fact that we have more buying forces that want to push price up at the same time as well. All right. So when we now go back here now, yeah, we have to remember where we get this one from, which is the high of that and then the low of that. That is where we get this two line from, isn't it?
Yes.
You understand how I managed to formulate this price level?
Yeah.
All right. Okay.
Yeah.
So now, and we know that this is where the change occur. We can identify it. All right. Price has come back to where the change occur, which is where we are now. Okay. And where the change occur with our trade locations, they are very close. All right.
Yeah.
Which means this area where the change occur, changes can happen. Okay. And as we drop in there, what happened? We saw a bit of rejection. Even the following day, we have a little bit of doji, and the daily chart is telling us that there's potential possibility that a change can happen. But where is that place? That place becomes a key trade locations that we find from here. Are you getting my point? So
yeah.
This level is not just an ordinary level. All right. So this level is becoming a key significant level that we have to think of. How do we interact with this level based on what has happened previously, and us seeing the facts that we were able to break out of a significant downtrend, and then as we are pushing up, we continue to push up very strongly. No talking.
You can't talk all of them.
Really? But why?
Because my mom has said that.
Okay, then no problems.
Stop lying.
Sorry, don't mind my little girl. She always likes to be part of it. All right. So,
Who are you talking to?
my class,
For 3 hours.
please,
I'm
can
not-
you?
No. No. For 3 hours. Come on, even Dave doesn't do that.
So, like I was saying, don't mind my wife at the same time as well. Both of them are just being who they are.
You'll be tired after that.
So, as we were pushing down and we come to this key level, we have to now start to think of, okay, we are getting to an area where we will act, okay, based on we have structure at the lower point over here. Yeah, that looks nice.
Babe, she's wearing her all-in-one. Like a baby.
All right, I'm actually having a class. Can you give me a bit of a minute? I don't want to lose my thought process. I'm not going to be able to tell you this second. Let me not just lose my thought process.
Bad words.
All right, then. Can you close my door for a second, please?
No.
Thank you. All right. So, as I was saying, going forward, high confidence. When we get to this particular price level, we know where we are. We are not lost based on what has happened previously. One of the key reasons. And this is also a daily chart. All right.
Yeah.
What I want us to pay attention to is this, which we can't afford to forget. What is our initial topic of discussion? Structure, isn't it?
Yes.
And based on this, and if we look at the daily chart, even if we are following it, the key structure that we have over here, let's quickly have a look at it, is from that high to that low, So anything that doesn't give us a proper deep retracement is not going to be a structure, right? And so what I'm trying to show you is you can apply this on any time frame, all right? And you are understanding why you are applying it. So if we look at here, that could possibly be a structure at the same time as well, but we didn't take out the I for whatever reason. And even if we do, sometimes we break and then the structure says continue. All right, so like over here now, let me expand it a little bit so that you can see what I wanted to discuss. I don't want you to get confused. So we come down to this level, it's almost a double bottom, but for whatever reason, we were able to break the high. That is possible when it comes to structure. You can break the high, right? But what we are doing is, what are we following? We were in a downtrend before, right? And then we come to break the high. And in trading, what I realize is this. You see those ones that actually come and break the high, which is against the initial downtrend, okay? Number one, you have enough patience. Number two, now you are breaking the high, you are now confused, which is, let me show you. Let me quickly, let's do this one like this. Okay. So this is the part where it gets interesting. The trend is down because we have our four structural point, 1, 2, 3, 4, right? Now we traded. Normally, when we got here and we have this retracement, it's a shallow retracement, isn't it?
Yeah.
And which we shouldn't really be interested in. And then we have something that looks like as if now we have a trend up, okay? But that shallow retracement, I'm not going to consider that a structure, so I shouldn't even take it, all right? But the one that I wanted to discuss is this one, which is this high that break this particular lower high, all right? And then what then tends to happen is you'll be thinking, now we have a new trend. But look at how the price used that shallow retracement to bring about deception. The trend is going down, right? And then we shifted up and almost make a double top, and then we have a shallow retracement, which we shouldn't really consider as any deep retracement when it comes to identifying structure. And then we shifted up and we traded up above all the areas. But when you take your measure and you measure from this high, need to reverse that a bit, you will still realize that we are in the discounted zone, in the golden zone of 61.8%. Okay, so price moved all the way down, created a trend, then we retrace back up, we give a small little correction over there, and then we retrace back to 61.8, and then we start to fall. All right, there's a lot of confusion over here, but what I'm trying to say to you about price is this particular move that comes to here will always be the one that gives the most profit. Reason being is, it's not just a shallow retracement, it's a much more deeper retracement of this leg that come all the way down, and then we'll retrace all the way to 61.8. We haven't taken out the key structure, right, which is right over there, which is that high. We make a low, right, and haven't make that low. Even this retracement was 50%, right? It's not a discounted zone. We come down again, and then we are still gonna be considering this leg as one single leg like this, and wait for that deeper retracement, which is what I keep talking about, right? Which is at 61.8, right? 50%, we shouldn't really consider it because it's not cheap enough, right? 61.8 now of the old leg to 78.6 is becoming cheap. And when you buy cheap, then you have the option to be able to ride a much more bigger profit. Are you getting my point?
Yeah.
Right.
Yes.
Right. So if you are able to ride a much more bigger profit, that should be the level where you want to be. All right. So I was still doing this daily structure. So we now have another retracement over here, which is the retracement of this leg is still shallow, right? So you would normally not consider that as a structure, because these are inducements that price we want to come and go above it, because they are shallow retracement, and price we want to come and go above it, such as we've seen over here, right? And take out the stops that's over there and use that as an opportunity to push price further down. All right. So these are little intricacies that you would not see if you do not have that proper training and understanding of structure. You will be thinking, okay, so what has happened here? But just because you can say to yourself that I will be selective in my trades, I'm not thinking anything that is 38.2 or 23.6. I want to take that deeper one, right? Because that deeper one has given me enough room to say that I'm patient, number one. And patient is part of the game. And the dog who eats the fat, what do they say? The patient dog eats the fattest bone. Are you getting my point?
Yeah.
So in being patient, you eventually earn the reward. Jumping in, and where you're going to jump in, you realize that, oh, it's that shallow retracement. You don't need it, because at the end of the day, you are buying something that is way too expensive. So what you want to do is you want to read the play and say to yourself that, where are the stops? Okay. Are the stops on a retracement that is shallow? Oh, if the stops are going to be on a shallow retracement, then at a particular point in time, if I can wait enough, I know that price will come back above it. All right. And that theory was proved over here. This was a shallow retracement. Price end up coming back above it, give a much more better trade location. All the traders that come in early that were induced into selling from a shallow retracement got taken out. And then even if you find a reason to find somewhere to enter on this external structure, and even with the retracement, you will still be in to reap a much more bigger reward. Are you seeing the way the price is unfolding? All right. So we now have this structure that is giving us this bearish continuation. Let's say we have this bearish continuation, which hasn't stopped. So if I ask you on the daily time frame, which is more or less like a short-term trend, right? What kind of trend are we in?
At the moment, it's bearish.
So we are in a bearish trend. Okay. So if we are in a bearish trend and there's no confusion about that, and we are sitting in this particular location, okay, what we want to see is we want to move down to 8 hours. All right. What we know about here is this. We know that price is getting cut off over here. When we come to this area, we get cut off, okay? And when we get cut off, what is over here? At the top of over here, what is there?
Stop orders.
All right, stop orders are definitely sitting over there, okay?
Yeah.
So if stop orders are sitting over there, we might have as much as stop orders are sitting down here as well that we've taken, okay? And this is what price like to do. Price like to give you a reason to take stop orders, right? Which it has taken, like to give you a reason to now it can do this, which is that break and retest that everybody will be talking about. But if I look at my break and retest and it's shallow, and possibly I'm thinking, okay, maybe price is going to come down to this level, right? Just because my break and retest is shallow, I wouldn't want to risk this break and retest. Break of this support, retest it, and come down. I wouldn't want to really risk it, but that doesn't mean that it's not a trade idea that can be taken, right? It can be taken. All right. So if I want to risk this break and retest, I will be looking for a much more better level. And one of the key levels that I'll be looking for if it's a break and retest trade is to look at where the orders are again, somewhere over here. We were going on like as if we are going to turn. So there was a quick sell-off that was coming from there, and then we have these buyers that actually come in on that particular day, right? And then we turn them upside down, shows us the significant amount of orders over here that can overthrow what a whole day of reversal is trying to do. So I can be thinking my break and retest can come inside here, all right? Which is a little bit up there, okay? That is one way of looking at it. And I will be able to measure that from that high to this low, okay? What do we have? You can see the zone that was sitting down there already clearly. So what we are trying to do, which is what I discussed with you earlier when we started, is trade location is number one thing that you have to pre-plan, okay? So if you are going to set an alert now for any trade to say that I want to continue to follow the trend, where is the alert going to be?
It's going to be on that level.
All right. So in this trade location with also of different kind of ideas that we've generated, okay, that if I want to continue to sell, if price manage to reverse from here for whatever reason, yeah, because it's in an area where it's likely going to reverse, then I can start to think of selling in this particular trade location. All right. Because there are so many things that are there that can help me. The order block, which is this order that we sell off from, is there that we wanted to reverse. The 78.6 is there. 78.6 is there at the same time as well, which is a much more deeper and deeper retracement. And if I see a reason why we have a confirmation protocol, which we're going to talk about as we go on, then I'm going to take a sell opportunity. So just because we have this zone there, right, doesn't mean that yeah, I want to sell blindly as well. I will consider many other things before I can take a sell over there. And that is where we will talk about how we look at things to give us the confirmation that price is going to sell off. We are going to get there. So you can see how we are breaking it down. The challenge that we have over here is we were thinking the trend clearly is still down, right?
Yeah.
On daily. And then we know that if the trend is still down on daily, the next thing that we should be expecting is further sell-off. Okay?
Yes.
Right? And you have to remember, as we were analyzing the oil chart, that if we then have this further sell-off, which will come below this major structure over here, and then we trade below it, right? We have a potential possibility for traders to say that this is the cheapest price that has ever seen, and price will go back up here, okay? But before we get here, right, we can see a trade opportunity that can come in over here, and then that sell-off will then occur. And if this price managed to retrace because of where we are, which is inside here as well, but I'll tell you some of the reason why I wouldn't really like inside there. I will explain that one, which is inside there, which is going to be a valid area for us to start looking at. because we are inside there, price can reverse. And if it reverses and gets all to this area, then I can start to think of, if I see a confirmation to sell, then I'm going to sell. And if I sell, then probably my target now, I know that my stop will be at least over here or at most over here. I don't have too much confusion about what my stop is, because I know already that this retracement move has already given me 70% discount, number one, even more than 70% discount. If you stop at 78, that's 22% discount. Yeah, 20, sorry, it has given me 78% discount. My losses that I can ever encounter, it's not going to be far away from 100, which is 22%. So it's more or less like my loss is 7. Sorry, my loss is 2. My risk is 5. Sorry, my loss is 2. My risk, sorry, my risk is 2. My profit is 7.
Yeah.
Again, if the all of this is 100%, my risk over here will be like 22, and then my profit for price to come down will be 78. So even with that analogy alone, you will start to become selective in your trades, in what kind of trades that you want to take, and that will make a lot of difference in you feeling like as if I'm missing out. All right.
Yeah.
So with alerts never.
Just 1 minute, I need to use the. Just 1 minute, I need to use the restroom quickly. 1 minute.
All right, no problems. Go ahead. If there's any question from anyone else, please do not hesitate to ask. Because I'm gonna literally break this down into 8 hours. The one key thing that we've understand so far is we have our external structure, which is on that monthly leg, which is here, right? The weekly is what opens the door to the new internal structure, which is very bearish. And that bearish internal structure, just because we haven't taken this low, that bearish leg of the internal structure hasn't turned to a new external structure. But with the look of things and the kind of pressure that we are seeing, there's every possibility that that may happen. But because it hasn't happened, we are still maintaining our monthly external structure, which is from here to here. So everything is subjective until something happens. You cannot be over anticipating. We are acting based on the data that we have. And if the data that we have hasn't shown us that something has been taken, we will just stick with the data that we have. We still have 62 to go. We are currently at 66, which is not bad. All right, so having said that, let's clean up this chart a little bit. All right, so that is one trade idea. And you have a location, okay? And you know that in that particular location, there might be trades that will happen. You don't want the first one more than so, which is not such a bad one. Trades from it can occur as well, but the deeper it is, the more logical it becomes. The trading logic, right, is very, very important. I was I'm going through my old book today, and I so much love this book. I don't know if you can see it.
Lifted mind
over market.
Okay.
All right. So this particular book, I love it so much because sometimes when I feel like reading something, I'll go inside it. And I was reading about synthesis of structure, time, and logic. Okay. And structure, it's very easier for you to see because structure is a byproduct. Structure is something that is already completed. Okay. That is why we can easily say that, okay, and this is not even the kind of structure that the book is talking about, but that is why we can easily say that we have a bearish structure. The only reason why we know that this is a bearish structure is because it has completed. All right.
Yeah.
But time and logic, right, are not something that you can visibly see. And those are the most important part of trading, that if you can master, then you won't be getting, if you want to see structure before you enter a trade, you'll be entering late. Okay, but if you understand time and logic, then you will be ahead of the curve, and that's what you want to be. You don't want to enter a trade when it has already occurred. You want to enter a trade before the actual result has occurred, which means the plan that we have over here is, if price comes over here and then there is a bit of confirmation, then we want to confirmation to sell, then we want to take price down to here. So we've already thought about how far the price can possibly go, or where we are taking the price to, and then we've thought about a bit of reversal, and that is one part. How about this part? How about looking at it like this? That, oh, what if this area fails me and then price comes to here, right? And the moment price comes to here, what would then happen? You will realize that all the stops that are over here would have been taken, isn't it? Are we there?
Yeah.
All right. So
Yes.
you are planning that amongst your ideology as well. And if price manage to come over here, what then start to happen to structure? So now we know that on daily, this is our external structure, internal structure, another external structure, right? And the external structure should be the most strong one, such that if price is coming down here, coming into here, we know that we still have internal structure. And if we have a confirmation protocol in place, and we start to see that our confirmation has now occurred, and the confirmation protocol we discuss will be on lower time frame, which we will get to anyway. Then we can say that we will now have continuation of external structure, which is in line with our trend. All right. But for whatever reason, if we now have a shift and price come above here, straightforward, the one thing that will come to mind is, okay, now the internal structure, right, which is this retracement leg, this is supposed to be the internal structure. Now the internal structure is now turning to become a new external structure. Are you there with me, Grace? So if you have now seen this,
Yes.
that, oh, we've taken this now, and then we have a potential possibility for a new what? A new external structure. You are clear with that. And the reason why you are clear with that is because you understand this structure, right? Which is a bearish structure. And this bearish structure, we've taken a key structure, which is over here. And that structure is not just an ordinary structure. You know that you have a lot of stops over there, isn't it? So you know that in this area at the same time, there's a lot of activity that can send the price down and make a new low, all right? A structure, external structure will be able to start at a point whereby when that external structure starts, then a new low have to be created. All right. So our external structure, the end point of that external structure will be over here, and then eventually we created a new low from this particular lower high over here. So when that happens, the external structure, a new external structure will start to form the moment we trade above where? The moment we trade above this last
stops,
right? So once we start to trade above here, we are thinking, and if we trade above here, you might find it possible that the moment we just trade just even a little bit above here, price might start to sell off back. And if price sell off back, which is not such a bad thing, now you are now thinking there is possibility that price might stop over here for it to continue, but that still doesn't stop price from just whipping all this area and still come down. So don't get confused, but there's a way to attack everything. But these are the dynamic that you need to have at the back of your mind, because these are possibilities. All right. But let's say, for example, we want to, if we have something that is clear, which is a move that now move clearly and take out all that, that is a different level. That is a proper external structure. And if that proper external structure occur, now you can say to yourself that let me be confident to wait for a much more deeper retracement, which may happen. Okay. And if that much more deeper retracement happen, then it's a good trade. If it doesn't happen and you see something like this and price goes up, okay, you have to remember that just because we have a very strong push and it's a shallow retracement, then you can still see a reason that will take everybody by storm, and people will start getting scared that, oh, look at us, we've broken that, but not really looking at this retracement as a shallow retracement. And then we come here and eventually price starts to rise. Okay. And the only people that will benefit from this move are the people who are patient. So, and this is how retracements can let you understand where you need to be patient. You have a shallow retracement, you're thinking, that is not me. Be selective. There's nothing wrong in being selective. You have a much more deeper retracement, you are thinking, okay, this is me. All right. So having said that, let's quickly move forward so that we can get much value out of this. All right, so we know that we are on daily, and our last structure on daily is a bearish structure. Okay. If I say that this is a bearish structure, just a quick question for the class, okay? Can I now say that a move from year to year and a retracement, let me change that color. If this is my structural point, can I now say that this is now my structural point, a retracement back down to up there, and a move to there? Let me expand this so that you can see. So there's a external structure that move all the way down to here, and then we have a retracement to this level, and then we have an external structure continuation. But I'm now saying this particular external structure and a retracement back to this eye, which of it is my external structure? This eye over here. Let me delete that, because I don't want us, I want us to be accountable with what we do so that at least we have a clear understanding. So we have two eyes over here that are closer to each other. The eye of 83.59 and the eye of 82.35. Which of them is our structural point?
The higher one.
Sorry?
The higher one.
The higher one, you believe, is our structural point. How about Kwaku?
Hmm.
Which of them is our structural point? This eye
In
over
terms of
here.
what you, yeah.
Huh?
Yeah.
Which of them is our structural point?
Yeah, the higher one.
The higher one. Any contribution from Damian and Confidence?
I think it's the 82.35.
82.35. Okay, so we have one for 82.35. We have majority at 83.59. Any other contribution? If you can even talk, Damian, if you can send us a text, let me see. We want to vote. Somebody have to win this.
Okay, sorry, I think I'll change my mind.
You want to change your mind? Okay,
Yeah.
it's allowed.
I'll change my mind and explain in the sense that the lower point of the sternum, the first leg, right, is after the 83.58.
The lower point.
So yeah, that one.
Yeah.
Is after that one has been formed. The 83 after that one. So at this point in time, we are looking at the lowest price. You know what I'm saying?
Yeah.
So it's that one, and then so from there we have to determine the internal structure or the distance after that price. So it has to be that one. It cannot be the one before.
Yeah, that's good.
Is that? Thank you so much. So now you can see some little things that you can skip, and then you get confused, and then you'll be thinking, I thought I know this thing, and then so thank you so much, Confidence, Damian, Grace, and then Dr. Kwaku for bringing out the explanation so clearly, which is exactly what I want you to understand, because
that is not Damian, that's Kwaku.
Yeah, I mentioned your name last. I mentioned Damian because he's part of the class, but he didn't contribute.
Sure.
I deliberately mentioned his name, but I gave the full credit back to you, bringing, and then Grace eventually agreed at the same time as well. All right. So, but that is our structural point, okay?
Yeah.
This, let's now talk a little bit about this. That move that come from here to here, okay?
Yeah.
Give us this particular move at a particular point in time. There's a tiny little bit of structure over there as well, right?
Yeah.
But for the leg of our bearish move, our actual structural point is over here. But bear in mind, like I said, bear in mind at the back of every structure, because there's a downward move, it's just that some structures are stronger than the other, because there's a downward move and we have a retracement move, and then we start to sell from here, and traders, we still have stops over here at the same time as well.
Right.
You get my point? So where traders have stops, two things can happen. Psychological effects will take place over there. And one of the things that will happen is price can go back there and then continue to go back up. Price can test it and use it as a resistance for price to start going back down at the same time as well. Just bear that in mind, so that we can move forward to going closer to confirmation protocol. All right, so the key thing is where we are getting to now. Every single thing that we have explained all along, yeah, let's assume they don't have any importance anymore. I will explain the reason to you. So we want to get into day trading now. We have looked at analysis, and then now we want to start looking at how do we approach this on the day trading point of view. So we have key structures over there, and look at the funniest part of everything. You know, we were talking about structure, and we talked about a move that goes like that all the way up, and a retracement that keeps coming down.
Yeah.
And see how deep that retracement is.
Yes.
And that retracement did not take out this low. Sorry. You see that I didn't take out that low, but it was so close to it.
Yes.
And obviously someone somehow. That was the deepest retracement that we've got that give us a new high. Yeah?
Yeah.
All right. And that was what gives us that key monthly structure. Because that was that deepest retracement that we've got, that particular area, which is this low, becomes a very key important low, and we know the value, which is 62.8, and we are approaching it now. Yeah. And the way that we are approaching it, as we are coming, I'm saying for day trading purpose, everything that we've done is not as important anymore. What is important to us now is we're going to be looking at this key last external structure. Okay. So if I move to 8 hours chart, our swing points, which is the same as our structural points, remains over here. And what do I mean by swing point? Swing point is that point whereby price can just decide to get to and start to turn around. Okay. It's the last part of the structure that take the price all the way down. All right. So we have our swing point over there, and then we've gone over here. Okay. And then the most important part of all our trading experience on oil now lies from anything over here to over here, which we haven't even got down to here. Okay. So this range of 83 to 62 is one of the key range that we're going to be playing with. Price is not just easily going to come down here and take this place out easily. And price is not just easily going to come down here and take this out easily. Those are key things that you have to have at the back of your mind. And you know the reason why price is not just going to come down here and take this one out easily. Even if it can, it will still show us that this area is important. Okay, but one key thing that we have to understand is for traders who talked about support and resistance, let's say this is our key support. Okay, and you know how we find this area, and this is our key resistance, and you know how we find that area. So once price is getting to a key support, what is trying to happen? What will be happening? Are you supposed to be selling support?
No.
Exactly. So when
you should be waiting for discount.
Support, you're not going to be selling support. You're going to be thinking of buying support. And the only time that you sell a support is if a support has been broken, retested, and price starts to go back down. So, and you will know that is trading logic. You will know that from here to here, right? That's about 21 pip, $21 different. And the key thing about this $21 difference is this. Price is getting to an area whereby it's a particular word that I wanted to use, whereby it's getting to an area where it will become the cheapest. This is going to be the area where price becomes the cheapest. This is going to be the area where price becomes the most expensive for this trading session. And this is let's see, this started to occur from December 2022. So the range that we're going to be playing, that even if I'm blind and I wanted to trade blindly, I shouldn't be confused about buying this level. Are you getting my point? If I don't have any other thing to back myself or say anything, I know that if price comes to this level and I buy it, I'm buying the cheapest and I'm buying low risk buy. Are you with me?
Yeah.
So this area becomes the cheapest. It's got the lowest risk. There's no need for me to buy over here. There's no need for me to buy over here. There's no need for me to buy over here. There's no need for me to be buying over here. This area, trade location, I have identified it. It is not just a good trade location. It is my structure. It is everything. So 8 hours now. What are we going to do with these 8 hours? Now pay attention to this. So the same exercise that we've been doing, we will now take it like this. This shouldn't be strange to anyone anymore. So this is the most relevant information to us when it comes to structure, okay? And as this becomes the most relevant information to us when it comes to structure, this is the only leg that is important to our life right about now, this second, as we're talking, as we're going into Monday, okay? Such that, where is our swing point? That is our number one swing point. That is a trade location. And as much as that becomes our number one swing point, what can happen in a swing point? What do you think it's over here based on every single thing that I've said to you all along?
Stop orders.
Exactly. They are there, and that's a swing point at the same time as well. What kind of what's it called are we in? What kind of trend are we in?
Downward trend.
So we are in a downward trend, and that same downward trend is a downward trend that we've been seeing on the weekly charts that we are following. We are still on the downward trend on daily chart. Okay, the 8-hour chart hasn't changed; it's still a downward trend. And then the only difference is, as much as the whole of this is the external leg of our downward trend, now you can see clearly the external leg of the 8-hour downward trend. So this is the external leg of the 8-hour downward trend, the internal leg, external, internal, okay? Which means if you want to take a trade, you just because this trend has formed on 8-hour, this completion of trend 1.1, swing point 1, swing point 2, swing point 3, swing point 4. All right. After that swing point 4, and then you see a good 8-hour retracement. Okay. Pay attention. Good 8-hour retracement that fails to take out this, and it's even a much more deeper retracement. Okay. Is there anything wrong in taking a sell over here? This is your external point, okay? This is a completion of a trend from this swing point 1, swing point 2, swing point 3, swing point 4, completion of a trend. Retracement, all right? This retracement now will give us another, this retracement, the swing point of this retracement now start from swing point 1, swing point 2, swing point 3, and a swing point 4 give you that massive sell-off, okay? So that one has occurred. Now you have swing point 1, swing point 2, swing point 3. Now we are in what?
6.4.
We are looking for that swing point 4. All right. So this is external. This is internal. Okay. And now we are looking for continuation of the external. All right. If for any reason at all, and this 8-hour is proving that there's potential possibility that there will be reason, or there may be reason. Okay. The last low that we've seen was that one on that particular, and that's our swing point, isn't it? And at the bottom of that swing point, when price retraces, you can see multiple reasons why price is looking like as if it want to go up. For good 8-hour period, these are not 2-minute chart, these are 8-hour. We are seeing what's it called, rejection, multiple rejection, doji, this and that. We saw this large sell off. Pay attention to this that I want to show you. It's like a little secret at the same time as well. When a candle closes without a wick, okay, there's what we call squeezed in orders. It's like the are actually forcing the sell to occur, squeezed in others. But it looks like I say maybe this one have a wick. I'm not sure. Yeah, it's got a tiny little wick. Yeah, there's a wick there. But if it doesn't have wick at all, right, it can signal a big reversal at the same time as well. So that kind of reversal is occurring over here. This second, what we actually do over here is this. We know that at the back of here there will be stops. So those stops were taken. They've already been taken, right? And those stops that were taken, price is now reversed, okay? But that was the end of the trading session. So any actions that happen at the end of the trading session, you, as much as it can look important, it might not be that important. If we open on Monday and we start to break below here, okay, then our continuation of that external point becomes more stronger. Looking forward to, if we break below this low, looking forward to come to this target, okay? If we do not break below this low for whatever reason and price start to come back up, we know that when we get over here, we should have a little bit of, if price start to come back up, we know that when we get over here, there should be a potential possibility for us to either stop, right, by hitting it exactly or trading a little bit above it, okay, and then start to reverse back down, because this is the beginning of our bearish swing point, which is our external structure. We can hit it exactly, we can trade near it, we can trade slightly below it and start to sell back off. Those three things can happen. And if we start to sell back off, there's nothing wrong. When we're coming back down, we know that this area becomes majorly one of our first target profit. And then the second target profit will be over here. Definitely, we have to take profit. We shouldn't just anticipate that this is going to break, because we know what is sitting down here. You get where I'm coming from? All right. And then obviously, if the change down occur and price want to start to go back up and want to do this and continue to go back up, that is for a next swing. But where we are currently, we have to be able to understand what will happen. We have to understand that, oh, if we have an external structure forming, which is going to be coming down, okay, and price has come down to hit a previous low, looking like as if this area is now acting as a support, we can anticipate to enter a next trade in the direction of the external structure. We can anticipate price coming back to this area of highs, okay? And then this will be a very good trade locations for us to take a sell trade, right? So we do not want to take a sell trade inside here. We do not want to take a sell trade anywhere here. But if price comes here and decide to do the madness and start to trade down below here, right, again, then we can say to ourselves that, okay, there's a reason for us to take a sell trade. But is it a reasonable sell trade to take just because we are approaching support? So every single thing that we want to do on oil now requires what?
Patience.
Exactly. So we are approaching areas where we need to see, where we need to have patience, and that patience is going to pay off, because this trade might not unfold on Monday, might not unfold on Tuesday, it might unfold on Wednesday or wherever, but we know exactly what is likely going to happen, and this is how we're now going to play it. Just because we are over here now, taking a sell from here, it's not such a bad trade. It still gives a little bit of a room, but we know that we are selling down into a support, okay? Once we sell down into that support, if we manage to sell down into this support, is one key thing. But Another scenario that we need to understand is this external structure, isn't it? Let's say we have reached an area where things are going to turn around, which I'm going to go into in a little while again. Let's quickly do this. If we go back to our daily, you remember there's a point here on the daily chart that we talked about, which is this order block. And I'm going to take it as red, okay? From that to that, let's just put a box inside it. This is our major key levels at the same time where price can turn, okay? Right, so we have our 8-hour chart now, okay? And the 8-hour chart is still telling us, you can see that in this location, we said we can have a reversal, all right? It's a good trade location for us to look for reversal, and likewise down here, it's a good trade location for us to look for reversal. But how do we look for this reversal is the next important thing that we need to talk about. So we know we've seen our last external structure. We know we've seen an internal structure that's leading to a next external structure. So if we go to a 4-hour chart now, we start to look for what price is telling us differently. So it's still the same, that structure, but that structure that we're seeing, it is now glaring that we can see a triple bottom, okay? And a triple bottom is more or less like a reversal button. This touch over here, that touch over here, this look slightly below it, and then looks like as if we want to reverse. So everything still remain intact. Even if we want to draw another structure for the 4-hour chart, we are still where we are. So the lowest risk trade is inside there, and it's at the bottom of this box which we form. There's a low risk there, such that losses, if we're going to encounter any loss, wouldn't be more than the low of this candle if we decide to buy. But is it a good time to buy? So the next thing you need to do is you need to look at, say, like an hourly chart, okay? When you go to hourly chart, you are still maintaining that this is what? This is a bearish structure. When you look at it, you can see that price went up, come down, went up, which means we break this high, okay? And the key thing about this is this. Look at here. Just pay attention to what the structure is telling you at the same time as well, because it actually helps when you can see it and you can follow it. So we have this low, we have this high, we have a higher low because we retraced, but we did not take that low. Let me show you again so that you can see. I don't want it to look like as if I'm too fast. So you can see that we have a low over here, right? And price went all the way up, retraced almost everything without taking the low. Can you see that? So, and that is still valid for us in terms of a trend. So we have that, retrace that. So we form a bullish trend in a way, because we have this low, this high, this higher low, this higher high. So we form a bullish structure in a way on that 1 hour. That is telling us that is the trend changing. If the trend is going to change, then we should have continued bullish structure. Then we have price retracing itself all the way back down there, form that little bit of a high, and form this last key structure, okay? And once that one was formed, we start to come down and we trade below here, right? Which is really sticky icky now. And then we come down. We did not only trade below that one, but we kind of weak the whole of the bottom, and we find ourselves down there, okay? So the last thing that we saw in terms of this structure is we have this sell-off. We have a much more higher high, all right? which is one of the trade that I've discussed about, that sometimes price like to come above the whole of the high and then give the best of the trade. So now we have a new low, which is on hourly. All right, on this hourly now we are retracing. Okay, so this becomes what? This leg becomes what? A key major last external structure. Are you with me? Or we are lost?
No. Yeah,
Alright.
we are with you.
So
With you.
that becomes a key major last external structure. And if that is a key major last external structure, what have we seen? We've seen a shallow retracement, isn't
Exactly.
it?
Yes.
With a shallow retracement, you can expect that maybe price can decide to do this and come down. It can decide to be coming down completely, but just because it's a shallow retracement, we can then see another much more stronger retracement in, and all this move that we are seeing inside there is still within our external structure. In as much as we haven't taken this our external structure out, we cannot start to think of a bullish delivery or a bullish order delivery. The last order delivery that we see is bearish, which comes all the way down there. Now that we are seeing this one, we have to have patience to see what will unfold over here. Are we going to see a move that will now come above here, right? And do this and do that. So the key is, if we see a move like this, for whatever reason on hourly, what kind of a move is this? What kind of a structure have we delivered there?
Bullish.
All right. So we've delivered a bullish structure over here. And if we delivered a bullish structure, then we are now have to start understanding our swing point. And our swing points will be this swing point, that swing point, that swing point, right? To give us that swing point, okay? To give us another swing point, to give us another swing point. So once we know all our swing points, all we are waiting for a continuous confirmation protocol that we need to see is for price to, it has taken out all these ones. 1 hour has turned bullish already. If we see a retracement back down that hasn't taken this level out, right? And we stop there for whatever reason, then it's a good reason to start to take a buy and go. And that's and that is our buying opportunity. So we have to see it actually unfolding, okay, and understanding the way that it moves for us to have that confidence to say that we want to buy. But we are not looking for it anywhere, just anywhere. We are looking for it in a trade location. Are you getting my point? We are looking for that bullish delivery in a trade location. And how did we get this trade location? We find this trade location from what has happened
On a daily time frame.
you find this trade location from what I've broken down for us from this area. That's one of the key trade location. The second key trade location is at the bottom over there. So if we start to see a bullish delivery, right, in the known location, right, and then we start to break above key swing point level, straightforward, we have good enough reasons to say that we've had enough patience. We've seen that things are now shifting to the bullish side of things, and then we can take a buy trade after a retracement. And there is more to that I need to show you as we progress. All right, so let's say I've looked into 30 minutes now. I'm seeing this. This is the last low. This is a high that we've seen. And then look at this. It's like I say, we are forming a higher low. And if this can give us a reason to push up high and come down, and we start to see this, okay, we know that we saw a bullish delivery inside the what? Inside an external leg, okay? There's nothing wrong with that. The next thing that we want to see is, will this bullish delivery ever continue? And if we see another move back down there, okay, that gives us a push, and then now we are taking out the high, wow, that is more or less like something miraculous that we need to see for the oil price to at least say that, okay, we have the strength to go up. But we are not just looking for it, we are looking for it in our trade location. So if I go to, you gave me another, so if I go to Euro AUD and we quickly look at that, and you see how I'm going to deliver what that is saying, right? And maybe we can find, we're going to do a bit of back test on that one. Once we find key levels. Okay, so say for example, even with this, whatever, there's a key level over here for whatever reason. And the way that I wanted to do the back test, let me look for. All right. So we quickly look into monthly like this. Let's say I'm looking into monthly. The most important part for me is, as monthly form any bullish trend, and where is it forming it? So price has come down like that, make a swing over there, and then we make a low over here, and then we've broken this swing definitely, and we retrace, and we are doing that. So basically on this monthly, what it looks like as if it's doing to me is this. It looks like, see, if we are having something like this. So we have a move that come down like that, that went up. How did I get there?
Mm-hmm.
So let's say we have a move that went up, come all the way down like that. We take out that low slightly. We went up, we come down, and then we go up. In a way, I can see there's potential possibility for a trend going up there, right? And if I see that trend going up there, the last thing that I know that I saw monthly was, let's say before then, there is a bit of a cutoff point from this huge move all the way down, retracement, another huge move, then retracement. So we know we have a swing point over here as well. And that swing point has been cutting price up to send price down lower. All right. So having said that, let's look at weekly. So on this weekly chart, it is a bit glaring that we are seeing some bullish order delivery. Let's say so we have a push up higher, and then a retracement which is shallow, and then another push up higher. This is an inducement to say come and buy, come and buy. And then obviously we have another deep retracement now, which is more or less like the retracement from this swing to that one. And then we have a push up higher. Thank you. that push up higher that we've seen is coming to this level at the same time as well. And in this level, it's not somewhere where we want to play with. The reason why we don't want to play with this level is because the last push down to the downside that we've seen, when it started from here and went all the way down, we have further swing over here that we are able to break structure. So any move that was able to create a significant shift in structure, which is that to, let's say, that, those areas become very strong. Okay, and if that area is very strong, as I've said, is when I look at here, above there, price can come above there. What is over there at the back of all these swings? What will be there?
Stop orders.
All right, so there will be loads of stop orders over there, and price can come and take out just for the mere fact that they are there, right? There is every possibility that we can close this month even bullish, take them out and come above here a little bit, above that particular swing over there, and push above it. And once we push above it significantly, the one thing that would have happened the moment we push above 164.36 is we have become overly expensive. Okay, and once you become overly expensive, you've opened the gates for traders to see value, for professional traders to see value in an expensive price that they want to sell. Because for you to make money, a significant amount of profit, you have to sell the highest high. Let's say, for example, are you getting my point? So once we get to 64.36, instead of me to be thinking we're going to continue, I mean, I want to wait and see whether I'm going to see a bearish reversal in terms of confirmation protocol. But before then, let's analyze what then happened over here. All right. So that is a scenario that hasn't happened, but we know that at the back of here we have some swing points, and now this is where price is. But we got here with an external what? With an external structure, okay? And if we are going to see this sell-off, okay, this sell-off should, and we did not only get here with an external structure alone. Let's see, I think we got here, let's see what numbers we have, because maybe we've had a shift. All right, so the low of this is 152.58 sort of. Okay, so more or less like we have a double bottom, which is not bad. We haven't had a shift, so we got here with this external structure, and if we get here with an external structure, there's potential possibility for us to see an internal structure, right? An internal structure, if we see it, and we are patient enough, right, it will come down to this area, which is a previous area where we have congestions, and not just only congestions, we have a key bullish break of structures which occur over here to go up. So we might see price retracing back down to there. It might take a different kind of form to get there and then come back up here, right? We are still valid to see bullish trend. before we can start to think of coming down. Okay, having said that, let's look at daily quickly. So we know we are on our external leg and we want to see whether that still holds. So if that remains our external leg and then we have this sell-off occurring on daily, the first day, the second day, and the third day, the fourth day. So on the first day, we have a rejection that hits that particular point. We have a day, next day that slows, and then we have significant auction tests. And then we have another slowing day, and we are just inside this particular day alone. So what we've seen on daily is simple. We have continuation of external, internal. This does not make a new high, so I wouldn't use it. That's despite the fact that we have a retracement, because it didn't make a new high, it doesn't count as structure to me. This more or less like count like structure because we make a new high. Now we've seen the trend that we want to see. We have, what do we have? A shallow retracement, okay? And then we now have that move up, okay? And when we see a shallow retracement, it can give room for price to do what? To come and take that shallow retracement for whatever reason, and then come a little bit all the way down, and this will become a key structure that we do not want to we do not want price to take out, for us not to see a bearish external structure. If we see a bearish daily external structure that took out this low, right, then we know that if we start to see retracement for whatever reason, because that has occurred, we expect potential possibility that that retracement might not be able to take out this high. It can come all the way up here again and start to shift significantly down, okay? So, but we haven't got there. The last thing that we've seen is this, which is key to us, is we understand we have a bearish, a bullish external structure. So we're going to keep our trade location tight, which is that low, and we know that high. That's the range that we are playing with on daily time frame. And then we have another little range over here, okay? But we know with this range, because it's just a shallow retracement, price, we have it at the back of our mind that price can take it out. If price got there and didn't take it out, jackpot, we can now have a double bottom, just the way that we have that double bottom over here. Just the way that we couldn't take this one, and we have a double bottom in this area. So we have to take note of that particular place at the same time as well, because it might be that retracement of this leg that's just coming back to sit down over there. So we move down quickly to 8 hours and see exactly what has happened on 8 hours. So on 8 hours now, the way that I'm breaking it down, I hope it's making sense to us. So we know that we have a bullish external structure over there, right? And then we start to retrace, okay? And in this bullish external structure, we have a little bit of we have a little bit of a break of structure. So now we are now on the 8 hour, right? So we keep our bias of this key strong level, okay? We will look at what we are seeing on 8 hour, because 8 hour is what is going to give us a reason to trade intraday. We know that this bullish external structure, we start to find a reason that price has broken it. And one thing that you have to keep in mind is if we've broken it on 8 hour, right, that shows us that the current direction which price is likely going to be going, right, is to the downside, but we know where our target is. Okay, so the more we go, right, if we want to follow this and we want to start to sell this internal structure of this external structure, okay, we will be thinking of, okay, 8 hour is coming down like this and making that lower high coming down like that, another lower low making that lower high coming down like that. So we switch to 4 hour. We can see that 8 hours are start to form a key bearish tone, okay, and we should expect the same to go for 4 hours at the same time as well. We just want to look for some little changes that can make us make some decisions. So 4 hour, and then we break that little swing over there, which it is definitely possible to break. Then we went down there like that. So you can see how we are transforming in a cycle from time frame to time frame. Okay, so once this has occurred, let's investigate what then happened over here. So we have a low over there. But the one key thing that we want to do is, just because we know we have our own external structure there, then what do we need to have? We need to know where our zone is, okay? So as the internal structure of the 8 hours and 4 hours is coming down, it's getting out to our key location, okay? And what is that key location? 61.8, isn't it? All right, so we make a trend down like that. The second trend down that we're supposed to make, we failed. We couldn't take out that low. All right, so that's one indication. So now let's look at what is happening on 1 hour. And number one, we are already at a discounted zone. So, and in a discounted zone, we're going to be looking for trade opportunity, okay? So price has given us a good retracement down. We've hit 61.8, we bounce, we come back to 61.8. Now pay attention to this. When you look at this 1 hour chart, we've formed a higher low over here compared to that low, all right? And when you look at this 1 hour chart, what can you see forming?
Come help.
So you are now defining your path. We have this, we've hit trade location of 61.8. We have this 0.1 to 0.2 structure. And then what do we have? Third point of the structure. And then we have a fourth point of the structure, which is telling us that, okay, on 1 hour trend, we are bullish, okay? We have hit 61.8 trade locations, right? 1 hour charts, we are bullish. We switch to 30 minutes, we look for whether there's a difference. So, and we know that we have one key structure over here for our 1 hour chart. We form a new external bullish structure going back upward, right? And then at 30 minutes, it's telling us that we are coming down, which is not bad. Let's look at 15 minutes if there's anything significant. So on this one now, we know these are external, and then we see that on 15 minutes, we found some kind of rejection. And when you look at the areas where we find rejection, the same key thing that I explained to you on a bigger time frame, price is meant to continue to go up here. We form a block. We can see the bullishness, but we reverse it strongly and come all the way down, right? Coming all the way down with that reversal, even we couldn't take out that low. We have this bullish structure forming. So our next point is to see potential possibility of what can we get out of this. If price goes up and hit 50%, it's not such a bad thing, okay? With a normal retracement, and we've hit that. And what we want to do with this one now is we want to see that when price come down like that, pay attention to this, gents. And then we make that particular lower high, higher low. We come back up here to make a lower high, all right? And then we traded below that structure again, okay? Telling us that we make a lower low. And what I want you to pay attention to is this now. When you look at this, you can see that we have a slight by looking, just looking, you can see that we have a retracement over here, right? And that our retracement at the back of putting a fib, is it a retracement that we're going to venture into? That was at least a retracement to 38.2. You get where I'm coming from? And we bounced out of it. We couldn't make a new high. And then we now start to trade below into 50. So I haven't traded into 50 now. This is what I want you to pay attention to. If it's a good opportunity for us to buy from there, we will see it on 5-minute charts. All right. So on our 5-minute charts, we know we have this external, and then we have this kind of retracement going like that has taken out this structure. Our key point now is the 5 minutes delivering bullish tone, and then we make a new high. Okay, already we've hit 61.8, and where we're supposed to actually look for our entry is on 61.8. If we have seen a bullish delivery on 61.8, which is our trade location, and I'll show you what you are looking for over there. That's 61.8. I don't know if you remember how we got that 61.8. 61.8 is a larger is our retracement
level.
Yeah, of our external, right? So by the time you switch into 5-minute chart, when we get to that 61.8, this is where the confirmation protocol becomes very important. And I want you to pay attention to what the confirmation protocol is going to look like. All right, so the first time when we hit 61.8, we want to find a high that leads to that particular low, and that high will be this price. Over there, and that's the high that leads to this particular low, and this is how to work out the confirmation protocol. Okay, so if price hasn't done this, what we are actually looking for is for price to come above this high. Okay, and if price come above that high, that means we have now built a new external what structure. Are you with me?
Yeah.
Above that high that makes that low. And if we build a new external structure, then we are looking for a retracement that we're going to find that will now lead to that shift in bullish continuation. All right, that is the beginning of confirmation protocol. But in this case, look at how the price behaves. So we know that that is an area, this here is the area where we are looking for trend change, okay? But for whatever reason that hasn't occurred, okay? Price now come back again to this level, to that 61.8, okay? Now, a key thing that we need to look for is where is that low, where is that high that make the last low? And that becomes subjective. So you can say to yourself that the last low that I've seen over here now, because we didn't achieve it, we did not achieve it with this high, right? But we've come back to test this low, okay? Now giving us a much more better retracement. So just because we didn't take out that high, there's no trigger, okay? When we come back to 61.8 now, things have changed. So now we want to look at the last high that make the low. So we will then realize is that let's do a replay. This is what we need to do. Where is the replay? Okay. And where is our 61.8? Give me a second. So as price is falling from the external structure, and then we are going to play now. So we were coming from the external structure. We know where we are looking for opportunities. Definitely not on 23. Definitely not on 23. Let's see whether image. Sorry. Okay. It's long, but I don't want it to be that long. So we know this is our last high that makes that particular low, okay? What I'm trying to share with us will be for us to we are looking for price to even come to this high. the last high that give us the last low. As price is going, we didn't get that, but the moment we come back to this low, you start to see what we're going to be looking for in a way now. So 61.8 is our key level, and that 61.8 is around there. We want to test it the second time. So we form another low over here, making a new high, which we've taken, not bad. So that remains our last high. That remains our last high. For now, we've taken it, we're making a new high. But our trade location remains 61.8 anyway. And we need to take out this high first of all. But if we test that 61.8 back, we have to look at which high tested the 61.8 last. And that's where we were going. So we have this high that is going down. We have another low. We have another lower high over there. Another low, another lower high. So this remains the last high. So we form a new low. That is our last high that is going towards so we form a new low, and then we have another lower high over here. So that's our last high that we are interested in for now. If we take that one now, we have a new high, which is over there. So we are going to find that 60, if we can use 61.8. So this is our last high that we are playing with as we're going. As the high that needs to be taken for. So we took that high. We've taken this high, so this is our new high. We have a new high, we have a new low over there. All right, so that still remains our new high. That still remains our new high. So we form a new low, right? And that new low comes from that particular high. So we form, that remains our new high now over there. What we are looking for is potential possibility of reaching 61.8. So we have a new high right over here. And we have our 61.8 down there. So we form a new low, as you can see, traded below that, that becomes our new high. So as we form this new low, this one becomes our new. All right, so we have a new high over there that went down there, but now we've taken that high for whatever reason that we've taken it. We form a new high over there. If we are retracing like this, and we've broken this particular structure, and we are going to trade above this high, right? That is a bullish structure, but we haven't taken this high now. We haven't taken this high, so we haven't formed a bullish structure yet. We've broken above a key structure over here, right? We'll retrace back, but we haven't taken that high. So our high is gradually moving away from this one at the top, much lower. So we're getting into some levels now. So we didn't take that high, but we retrace all the way back down. And we are sitting on this particular level over here. So as we keep going, the last eye that we formed that make a new low was this particular eye. So now we are making a new low, and then we have that eye. We haven't taken out an eye that will give us a trend. Okay, so we have this eye now. We form a new low. We need to take out an eye for us to be formed. So now we have a new low, but we have a new lower high. So this is the eye that we need to take for now. And we are pushing down significantly. Now we've hit 61.8. Right. So now that we've hit 61.8, this remains our new high. Okay. We went down, we even form a new eye over here. This is the eye, this is our last eye. And you will see what I wanted to show you. This is our last eye. If we take this eye out, then we are starting to see, so this is our last eye that formed this bearish external structure that went down like that. Now we have another new eye that forms another new low. Okay. If we take out this eye now, we'll be looking for bullish structure. So we test it. So that one literally take out the high. Let's see if we cannot go down lower because we've hit 60. So you can see how we are forming bullish expectations. So we've actually taken out that high now. If we retrace again, right? Let me pause it right there. The last high that give us the last low was this one. Okay. The moment we take that high, so what we then see is this. It's like we haven't finished it, but this is good enough to explain what I wanted to show you. We have this low, we have a lower low, right? And then we have a eye that literally brushed that eye. It's like we went down lower and then we form a new eye. Okay, so this first point of the structure, second point of the structure, third point of the structure, and the fourth point of the structure creates the first bullish trend that we are looking for. Okay, and if that is the first bullish trend that we are looking for after hitting the 61.8, okay, what you want to do is this. You now want to understand that there is a low over here at this low, and you want your risk because we've hit 61.8. This is at 61.8. Let me show you. You can see that's the 61.8. We traded below the 61.8. We formed this we formed this this is the high, this is the low, this is the lower high, this is the lower low. So we form this trend down. Okay, and then now you can see how we form a new trend up. Okay, and when we form that new trend up, right, that is not our entry. All right, but we now need to understand that we have started to form a bullish confirmation above 61.8, which is our level. Are you with me at all?
Yes.
Right. So once you see that one, that is the first sign of bullish confirmation. And now you want to know where that bullish confirmation started from, which is this low. So any price below this low becomes your stops level. Okay. So what you then want to do is as price now decide to come back inside there, right? That is not bad. It's not a problem. All you are doing now is this. You are now looking at this deeper retracement, okay? That forms a new eye, right? Once that is formed, now you have a confirmed bullish structure. Okay, any retracement back into the last candle, which is the last red candle, which will be here. Any retracement back into anywhere from the high of this candle to the low of this candle becomes the area where you're going to be looking for your entry. So the entry did not come after the first bullish retracement, which is that one. The entry will start to come after the second level. So you formed the first bullish order delivery. Then the second bullish order delivery comes in by making a new high. So now the third bullish order delivery will become an entry. So as price has come back inside here now and formed this doji even on 5-minute charts, that becomes a reason to start looking for buy opportunity. Let's see whether we're going to make a new high. So we know inside here now becomes the area where we are looking for our entry. As much as price hasn't break below down here, we remain a buyer. So we having more opportunity to buy. It can look scary or anything, in as much as we didn't come below here or a little bit 5 pips or 10 pips lesser than here, then we are still in the trade. So you can see that as price is going, it requires a little bit of work, but obviously once you are in the trade, you have a low risk following the bullish confirmation protocol. And we are still in the trade. And the first take profit will be to the next structure, which is somewhere around there. You can take a bit of profit over there and then wait for potential possibility for price to break above it for continuation. So the entry is in at 61.8. And to be deadly honest with you, yeah, if you can just do the due diligence to follow this. Okay, so this is where the week ended. I know to crystallize every single thing, it's not gonna just be easy, but I believe if we do more trainings over and over again, then you'll be able to see things more clearly, because this is how I managed to improve my trading. I know I can't do everything in one particular day, but obviously I should think this would have opened your eyes a lot into understanding that structure is very, very essential, and understanding how to break it down time frame by time frame by time frame, and understanding which one is the external structure, which one is the internal structure, and why you should play with the external structure and stay with the external structure and have a bit of patience. and then understanding the confirmation protocol for entry, which this is the first time that we've looked into it in a way. It would change I've used these techniques to turn £30 to £2,000 easily in 2 weeks. So, and I believe if I can do it, anyone can possibly do it. You get where I'm coming from? So it is not a joke. Once you build the skills, then you continue to use the skills to even apply for more funding in so many prop firm, and you don't have to even trade your own cash, and you'll still be making money. But the most important thing is the skills, and that's why I'm trying my best to see our best to develop people if they are willing, and then obviously I know I get busy lately, but yeah, I can break it down like that, and I can trade it live, and I can help people to see it the way that I see it. It doesn't mean that you won't encounter loss, but you can minimize your loss by understanding the trade location, and you know that the moment price comes below here, you don't even worry about it. You're looking for another trade, or else if you want to look for the 78.6 of it. But from that structure and understanding the external and internal structure, you can easily, and understanding your trade location, which is where you're looking for entry, not just any level. Oh, just because price has fallen down to here now, let me take a buy. You took the buy, you get bonds. Oh, price has fallen to 38.2, take a buy, you get bonds. Now look how price literally moved down to 61.8, and even at this 61.8, the key thing is I still have to look for this opportunity to take out this one and come and take out this high before I have full confidence. But even before then, the protocol has already made more than 50 pips profit, and if you've taken a bit out of that 50 pip profit, I'm not saying price cannot fall down and come down to 78.6. That's not what I'm saying. There's a possibility for that, and there's a possibility for that not to even happen, because we find a low that is higher than the previous low that was made. So, and I can see a lot of, look at this, look at what is here now. And this is what I like about understanding when price is engineering the necessary liquidity for price to go up. So when we have this sell-off, it's not that bad. But if you remember what I told you, where as the structure behaves, is you're going to have something like this. Trendline traders are going to look at this. Say, for example, let's say trend line or whatever. But above here, there's stops. Above all these places, there are stops. Above all these places, there are stops, and many stops. If price managed to break this, and it will be like as if it has broken a trend line, yeah. And if a trend line is broken, normally traders will be like as if that is a reason for price to continue to push up higher. Yeah, trend line is broken, right? But not only that, we have now seen it that at the back of here there are stops, and all those stops are buy orders. If we break above here and we trigger all these buy orders, it will give us a reason for price to just explode, because we have so many areas whereby liquidity is resting, so many stops that can be taken, and you want to see all those places, and you want to be the trader that take all those stops out and use all those stops as your own profit. You get where I'm coming from? Not
Yes.
that trader that's thinking that, yeah, they are hunting my stops. No, and this and that. It's both ways. You can be the hunter, and that's what you need to be as a trader, basically, anyway, by understanding where the weaknesses are. And look how many weaknesses are here. Because when they push the price up here and they sell, and they push it up again and they sell, and you can see where they are selling. You can see how they are selling. You can see where they are selling. And as they are selling, their stops is resting, 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 resting. And if those stops are out of the game, and it's time for the price to shoot up higher back to where it comes back from until we get to this level again. And you can see that it will be a smooth ride easily. Once we break to all these places, that's about 162 pips before we even look back. You get where I'm coming from? So you can do your measurements, you can see what you're looking for, you can achieve what you need to achieve. Once you understand external structure, you understand how deep the price needs to go, and then you are taking the price entry at those trade locations when price goes that deep. Okay. Oh, wow, we've done. How long have I been here? I need to run. I can't believe it. I thought we started around 6 o'clock. Oh, past 6 or so.
Yeah.
Well, anyway, guys, I'm so glad that I'm able to reconnect with the whole of you, and I'm so glad that you are here at the same time as well. And I'm so glad that Kwaku asked for this session, and we are able to do it, and hopefully it kind of spark a bit of more enlightenment in you. Please, if you do have questions, if you do have analysis, let me be real and honest with you. Yeah, you are not going to get to that level of expertise that you want to get to without continuous practice. That level will be attained with experience, if you get where I'm coming from. And
Yes.
experience comes with practice. Trading is an art. Once you understand the key concepts, then it becomes a very, very lucrative art for you. I mean, if I can do a small account and I'm still, sometimes I'll just want to do small accounts, sometimes I'll just do big accounts. And last 2 weeks, what have I been doing? Let's see. Last 2 weeks, our current month, £32 basically, and we started growing. £28, £36, £82, £96, £89, 64. Took a big hit there, and the others were large at the same time as well. And then keep the size small. Sometimes when you take those big sizes, if you don't know how to control it, 0.5 lots, 0.5 lots on a small account like that. But when you keep the size small, you have confidence to take the trade. Sometimes you can do the magic still, but that doesn't mean there won't be losses, But from £32, look how quick we rise from 64, 99, 115, 130, 182, 300, 242, 200, 300, 450, 460, 520. And I was trading this account for one of my daughter, and she couldn't believe it. 600, 570, 700, and 750, 800, 1000, 900 back, 830 back, 860, 700, 600, 815, 800, 930 something, 360. I withdraw some. Yeah, I withdraw £600, and then we're back to 360. But we still have about £726 unrealized profit, and still make more profit on that as we go in. So it is possible, and it requires, and these are still the remaining open position for this week. I don't think we have any red. We have about 364 pips, 331 pips, 100 and something pips, and that is the strategy, you know, and it is possible. You just need to practice, and understand what you are looking for. And if you have any questions, you know, this skill, I'm so grateful to God Almighty for it. It's not even by my own doing. It requires a lot of expertise. From 2006, I went through so many challenges, you know, but obviously those challenges gives it the possibility for me to be able to help other people, to be able to share with them what I've learned over the course of time, to simplify it as well for them, you know, to make it clear, because a lot of people still look at it and they can't really figure it out. And we haven't even used any indicators all along. You get where I'm coming from? It's just pure price action, you know, so it is possible. So let's keep at it. Let's continue to. Okay, so on our next class, maybe we look into that. But I kind of like the manual way indicate us. But on next week, I'll probably, let's say I have this indicator as you've asked anyway, but take let's and that indicator, the only thing that it does is where is it? All the blocks. The only thing that it does is it kind of give me where the blocks are, and I think when you look at it, that 61.8 that we were looking for coincides with some of the areas where the 5 minutes blocks are, right? And I think it's called MTF supply and demand order block at JPFX. Let's see whether, yeah, that on there. I don't know if you can copy it, or you should be able to find it on. But the thing about it is this now, yeah. If you don't understand structure, probably you may want to be taking every trade in that particular trade location, if you get where I'm coming from, because there's just so many of them. But let's see whether it makes a difference on 4-hour charts. Okay, on the 4-hour, yeah, so maybe the higher time frame one. On the 4-hour, the same location becomes the area whereby it looks for. It just tell you where the trade location are basically, and then it's up to you now to develop and understand the confirmation protocol to find the trade over there. Yeah. Any other question?
Thank you.
You're welcome.
Is it possible that we can have this recording, please?
Yeah, I hope it recorded.
Yeah, you recorded it. I saw you. I saw
Yeah,
it.
yeah.
Yeah.
Because the last time that I tried to record it told me that my space is full, but I hope the space is still there because I deleted some few things. So yeah, I will post the recording on YouTube as well, and then I'll send you the link.
Okay, thank you so much. I appreciate this. Voila, this is uh this is priceless.
Thank you.
This is priceless.
That's what I want for people, basically, for them to, it's not everything. Sometimes you have to learn how to give, and if you can give, I know you will receive more. And especially, I think I'm not trying to be racist. I know a lot of people of color want to find their ground in this field, and I know it's hard to find that person that can take you by the hand and walk you through, and every other person are just out there to either they don't have as much experience or they're just out there to just take away from you. And we haven't even talked about so much. I mean, what I did today was we talked about. So what did we talk about? We talked about structure. Yeah, then we look into trade locations. Then we look into, we haven't talked much about the risk management. We look into slight little bit of confirmation protocol. But there's still more that needs to be done. And then we need to look in risk management. We didn't talk a lot about that one. We didn't talk about building a trade plan. But notwithstanding, I believe what we've done today is a bit of an enlightenment. Then we can build up on it. At least I wouldn't have to, make structure much challenging for you to understand, and then you'll be able to see that, okay, when we do it, there's a reason why we do it. When we look at this structure now easily, you will not be confused to say to me that when I'm looking at this, you will easily know the reason why we're not going to consider this, and you know the reason why when this one move up a little bit higher, it's easy to come and take out that.
Price structure is so key because once you're able to understand the price structure and you know the trend, that is one big block of obstacle that is taken. Yeah, because
Exactly.
when you look at it and you are not even able to determine the price structure, then when there's a retracement, then you are panicking.
You don't know which exactly. So when you look at this shallow retracement now, you're looking at it and be like, okay, let me quickly join in. And then when you join in, then we are seeing the same thing over and over again, a much more deeper retracement. And then we are looking for that much deeper retracement to give us that push up higher potentially. Let's see, 8 hours. And when we come down,
so you made mention of 8 hours. Why is 8 hours that important?
All right.
When you're stressing on it.
Good question. Each and every trading session takes 8 hours. And 8 times 3 is 24 hours. We've got 24 hours in a day, isn't it? So when you break that 24 hours into 3, which is the 3 major sessions, you'll be able to see that one single 8 hours candle is one single session.
Right.
And one single session will tell you that, okay, this is what actually happened in this session. If a next session is showing us there's a potential possibility for a change. All right, let's look at this now. Look at this. have enough key sell-off in this particular session, which is large. Another session that follows it, the candle was so small, which shows that we are cutting off every single thing. And then despite the fact that it's 8 hours, we find this key retracement, which is large enough, which is telling us that things are changing. Why can't we have a continuation of this strong candle? You get where I'm coming from? We have a strong bearish candle over here. Instead of also have a continuation, this is the candle that it's that 61.8. And the thing about 8 hours is you can see structure more clearly for you to know which direction you want to follow. So easily now we know that from here to here would have been a structure, but we have a shallow retracement, but which means our key structure will be from here to here. Okay. And now that we have a deeper retracement, we know what leg we are playing with. It's easy for us to say that every single thing that will happen on any day that we are looking at the charts, this is our external structure, right? And when we start to see the internal structure, we know that all the range of play, what we are looking for in terms of risk and reward is not likely going to pass from year to year. So if from year to year is 100%, and then we have had 60 something percent discount, the last part of the risk is at the bottom over here. And even if we are now seeing a reversal, we know that we know our range, which is from year to year, and then we know where how far the price has come down to, and it's cheaper enough for us to even say that we want to start to act over here. Price can even decide to come all the way back down to this level, but we are happy. The only reason why we are happy is haven't tested this low. Okay, one single session we test this low. 2 session, why would we have 2 sessions if Asian cannot push the price below this low? Why couldn't London push the price below this low? You get where I'm coming from? Why couldn't London traders now follow suit and push the price below this low? Why is it that the US traders couldn't break this low at the same time as well, and then we are pushing up higher? So you can see easily every traders, US, Asian traders, London traders, US traders. So Asian traders try to come to the low. They didn't even take out the low. London traders, they come in, they were just sitting down there, and then US traders now try to push price back up. So it makes, you can interpret so many things using the 8 hours beyond what you can even imagine. You get where I'm coming from? You can interpret all the sessions easily, and then you can see where the falter is, and you can see what is holding rather than fighting with the 30 minutes, 1 hour, and suddenly 1 hour looks like as if it's holding, and the next thing it couldn't hold, and they are taking out the low. So when you place your stop, at the back of here, you know that is gonna for them to come and take me out now. That means something significant has happened. So even with that, you can see that there's a glimpse of hope that I'm putting my stop in a very good area, if you get where I'm coming from. And nobody wants to be taken out, but you have to get taken out 1 million at one time for you to start to formulate the right sense and ask questions. You know what I mean? When you ask questions, because if you don't ask these questions now, I won't even be able to remember to go deep into it for you to even see it as clear as this as well. So don't hesitate to be asking questions. Ask stupid questions. The worst that you will get is, I don't have an answer to it, but trust me, I will have answers to majority of the questions that you will ask, because it would have been a question that I would have asked inside my own years of experience at the same time as well. You know, so yeah, let's see if we can meet up again tomorrow and do more. It will be great.
So,
But for
Okay,
now,
all I need is the recording, so can watch it over
yeah,
and over.
I will process that. I will process that for you now. Okay,
Okay, thank you.
you're welcome. All right, then, guys,
I
I'll
don't
catch up
think I'm
with.
available tomorrow.
Sorry,
okay. Have a good evening. Thank you so much.
no problem.
Appreciate it.
Thanks for requesting as well.
Thank
Good night.
you.
Thank you
Good
so much.
night, everyone.
If do you have
Right.
the YouTube channel?
Yes.
You have the YouTube channel,
No.
yeah?
Can you give
Huh?
it to me? No.
You haven't. Okay, let me.
Yes, I do.
Okay, yeah. If you do, all you have to do is
Can you post it somewhere?
yeah, I'll post it now.
Okay.
Uh,
And then I'll just save your name.
so that's where, if you subscribe to that, that's where I'm gonna post the video once I process it now. Okay.
Okay,
Okay.
great.
All
Thank
right,
you
then,
so
guys.
much.
All right, no
Thank you.
worries. I'll speak to you in a bit. If I manage to do anything over the midnight as well, I'll send the link,
Okay.
and then we look at other things. I want to look into Bitcoin. I think Bitcoin is going to rise, and I want to look into indices as we go. Anyway,
Okay.
have a lovely night, and we catch up in a bit.
Okay. Thank
Right.
you. Appreciate
You're
it.
welcome, guys. Thank you.